So we'll start coming. So we are on the introduction. Last week, not that much of participation, but anyway, we started introduction to finance. Sorry, business finance. So I think we have finished. We did up to introduction, objective, decisions, all of the finance management. So I think we have discussed only the agency conflict. Am I correct? Those who came last week. Up to objective we finished. So you know that when it's come to the finance or the financial management or business finance, our objective is very specific. So we discuss all these things. You have to read and you have to ask from your other friends. We discuss this type of decisions and function, then objective. So when it's come to the objective of financial management or the finance or the business finance, it is maximizing shareholders' wealth or maximizing owners' wealth or creating value, not the profit maximization. Profit maximization, we do not consider as an objective because of certain limitations. I think you might have learned in the other subjects also. Profit is not the matter in finance. So our objective go beyond the profit. So profit is required, but the objective, as an objective, profit maximization, we do not consider as our ultimate objective. It is maximizing wealth, shareholders' wealth, owners' wealth, or we can say shareholders' wealth we can maximize by maximizing net present value in every course of action. So we discussed these things. And also you can maximize shareholders' wealth by maximizing market price. If it is a listed company, if it is a public limited company, we can maximize shareholders' wealth by maximizing market price of the company equity share. So we discussed these things. So today I think we have to discuss agency conflict. Right? I will come to this one later. Agency conflict. So these are the type of business organizations. I think no need to explain these things, all proprietorship, partnership. So you know what is sole proprietorship. You know what is partnership. So when it's come to the business organizations like sole proprietorship, partnership, what is the objective? Is there any difference between the objective that we discussed last week and the objective of the partnership or the sole proprietorship? No difference. In such type of business organization also, objective is creating value or maximizing shareholder or the owner's wealth. For the partnership, sole proprietorship, are there any shareholders? No, there is no shareholders, right? There is a owner or partners. So when it's come to this type of business organization also, objective is same. That is creating value or maximizing wealth. When it's come to this public limited company, you can maximize or you can create wealth by maximizing market price of the company equity share. So when it's applied to the sole proprietorship or the partnership, there is no any shares. No, because this type of organizations are not trading in the stock market. But if it is a PLC company, path is clear. You can maximize, so you can create wealth to the shareholders using the market price, maximizing the market price. I explained you last week how to market price, how this market price is maximizing, how the market price is increasing. So I'm not repeating this thing. My question is, when it's come to the sole proprietorship, partnership, how to maximize owner's wealth, how to maximize partner's wealth. By maximizing what? In case of the PLC company, maximizing market price of the company equity share. We can create wealth. If it is the partnership, if it is a sole proprietorship, because business finance include all the type of business organization, not only the PLC company. It includes all type of business organization, even non-for-profit organization. So when it comes to these type of entities or the organization, how we achieve this objective? Just tell me, by maximizing what? Did you get my question? In case of the PLC company, objective is clear. It is a PLC company, you can create value by maximizing market price of the equity share. Market price of the equity share will be determined by the demand and supply. So that factors of the demand and supply process will be. My question is, if it is a sole proprietorship or partnership, have you assessed or have you measured that you are creating wealth, maximizing owner's wealth? By maximizing what? Because there is no any shares. When it's out of the partnership ownership, there is no shares. Yeah? Are there shares for the partnership or the sole proprietorship? No. So then, why? I think in the A-levels we have learned this. In the A-level business studies, this is, I think, explained. This can be. Calculate by from the organization, understand by maximizing what? Huh? Profit. Profit is already detected in finance, in business finance, in financial management. Profit is not the matter. Cash flow or the value is the matter. Profit is required because profit you can create analytically also. That we are challenging profit. I think you remember in the last day we discussed this. The problem with the profit, not the profit. In case of the PLC company, public listed company, shareholders' wealth you can maximize. You can create wealth for the shareholders by maximizing market price of the share in the equity market or in the stock market. So my question is, if it is a sole proprietorship, small company, semi, partnership, so how owner's wealth is maximized? Increasing cash flow. If you elaborate the income, which income? Cash is related. Specifically, very precisely, we should be able to say that there's income. Very cash flow. Any other answer? Huh? If the we have coordinated, complaint करना coordinated like electricity. Students like to बताते हैं by maximizing what? Maximizing liquidate value. Liquidate value, or we can say the selling price. If this business or this particular project or this business, if you are going to sell, right? So that is the value. So if you can maximize that value, we call it liquidate value. Liquidate value. So by maximizing this liquidate value or the selling price of the business, owner or the entrepreneur or the partners can create wealth. can create value, right? If you are going to if you are going to sell this particular business or this particular project, so you should be able to maximize that value. In case of the PLC company, this is market price of the share. So that is the ownership of this company. Market value, equity shares represent the ownership. So in case of the PLC, by maximizing market price of the equity share. So if it is a sole proprietorship or the partnership, you can partners or the owners or the entrepreneur can create value by maximizing liquidate value or the selling price of the business. If you can sell, if you can sell the business with the highest value, it is the liquidate value. If you are going to sell, if you are going to give up the particular project, so what is the value that you can earn? Right? If you are doing a good business, if it is a very attractive one, the location is very attractive, so then you can sell this particular project. If you are going to sell the project, you can sell it to a higher value. So you can create wealth. When you are starting this particular business, your wealth was 1 million. After a particular period, when you are going to sell this particular business, if you can create it, if you can sell it for the 1.5 million, so you are creating wealth. So that is in case of the partnership or the sole proprietorship. Liquidate plans. Right. So now we are going to agency conflict. So then we can finish the introduction part. When it's come to the corporation, you know that some characteristics related to the corporation, legal entity. Can anyone explain me what is the legal entity? You know this thing, right? No need to explain. What is the meaning of the legal entity? What is the legal entity? What is the limited liability? What is the separation of ownership from the control in case of the corporation? What is the legal entity? As the person, business name can consider as a person in case of the legal matters. Now, suppose that you are taking a final yoga today after the lunch. Suppose it is not in good quality. So then you can go to the court or you can get the legal action against the final name because it is a legal entity. In the presence of the law, in presence of the legal matters, it is a person. So that is the legal entity. But in case of the sole proprietorship, partnership, there is no legal entity. If you are going to take a legal action against this kind of business, so you have to go against the owner of the business. That person, because for the business name, there is no legal entity. That is the legal entity. Limited liability, you know that also. If you invest 100 shares of the Sampath Bank PSC, suppose each at 50 rupees, so your total investment is 100 into 50. So your total liability in this particular company, Sampath Bank PSC, bankrupt, your total liability, you are responsible, or your total loss is maximum 100 into 50. So that is the limited liability. Your liability limited to the amount you invested in case of the corporation. But in partnership, it is not. Is it limited? No, unlimited. In case of the bankrupt, if this partnership went financial distress situation, so you have to take your personal properties, personal wealth to pay the obligations or the whatever the obligation you settle. Because your responsibility here unlimited in case of the bank. Third bullet, separation of ownership from the control. What is it? Separation of ownership from the control. In here, if it is a sole proprietorship, owner, manager, marketing manager, all functions are doing by one person. Owner itself is the manager. Owner is doing the everything. If you look at the small create a business, owner is doing the everything, every action. So there is no any separation between the owner and the control. But if you take this PLC company or the corporation, ownership and control, between the ownership and control, there is a separation. Because owner is the shareholder, operation or the controlling or the activities are conducted by managers. So there is a separation. There is a separation from owner, from the control. So this is special characteristics of the corporation type business. But in case of the partnership or the sole proprietorship, there is no such separation. Because of this separation of ownership from the control, there arises the problem between the shareholders or the owners and manager. We call it agency conflict. Right? We call it agency conflict. So then if I ask the question, then does the agency conflict is relevant to the sole proprietorship partnership? Not relevant. There is no agency conflict because there is no separation of ownership from the control. Agency conflict is applicable only to the corporation. Reason or the sources for the agency conflict, separation of ownership from the control. So let's see what is this agency conflict. This is very simple. You know that in a corporation, there is the owners or the shareholders, there is a managers. So managers are, you know that we are recruiting them for a salaries, for a certain benefits. So they should work to achieve the objective of business, to achieve the objective of this financial management of the objective of this particular business. So according to, as you learn now, our objective is ultimate objective of a business firm according to the finance is, what is the objective? Maximizing shareholders' wealth, maximizing owners' wealth. So we have recruited here managers to achieve this objective. So they should work, they should responsible to maximize owners' wealth. Now, as a human being, you can see they are rising the conflict because as a people or as a human being, managers are there to maximize owners' wealth. So they should take all investment decision, financing decision, dividend decision, whatever the decision in the way of maximizing shareholders' owners' wealth, in the way of creating, increasing the market price of the share. In that way, they should act to maximize the owner's wealth. However, now there is a relationship we call agency relationship between the shareholders and the managers. You know what is the agency relationship? In the agency relationship, there is a two parties, agent and the principal. In this case, shareholder is the principal, management or the managers are the agents. So we have recruited agent or we have recruited managers to achieve our objective. So what is our objective? Maximizing our wealth. So practically what is happening? They are rising the conflict of interest. Because as a human being, managers, rather than maximizing the owner's wealth, they are trying to maximize their salaries, their short-run survival, their other benefits, incentives. So likewise, rather than looking at the long-term goals of the business, long-term strategic move or the strategic objectives, they are just looking at the short-term benefits. They are trying to maximize their wealth, their salaries. So they are rising a conflict between these owners or the shareholders and the managers because of this conflict of interest. As a human being, this is happening. As a people, you just think about, they are trying to maximize their wealth. Management, their managers, suppose that finance manager always are taking the investment, evaluating investment decision, financing decision, dividend decision. So likewise, certain decisions are taken. Just think about like this. Companies evaluating investment decision, long-term investment decision. So what is a long-term investment decision? So we are investing today large amount of money. Benefit or the return we are getting, say after 5 years, 10 years time. So it is a long-term investment decision. When the finance manager evaluating this decision, he can see this is very risky decision. Benefits or the return is coming to the company or the business after 10 years time. Today we are investing large amount of fund. Investment decision means large funds. So then in his mind, he is perceiving this as a risky decision. In case this particular investment project or this particular investment decision, if it is failed, if it is not success as we expected, so ultimately they will have to sacrifice their bonus or the incentives. They will have to problem of the survival of the job. So likewise, they are thinking in the narrow way rather than looking at the future prospect of the business. So then they arise in the conflict. So managers or the finance manager just looking at this is as a threat. But shareholders are the parties who are taking risk of the business. So they want to take risk and they are expecting high return in the future. So now you can see they arise in the conflict. So then what is happening? When the finance manager is presenting this particular proposal or the project to the board of directors, so they can he can manipulate certain numbers. He can show or he can pretend that this project is not good. This project is very risky. So likewise, he can behave in the manner that convincing the board of directors this is not a good project. So we should not accept this particular project. So ultimately, what is happening by happening this kind of thing? So then company will lose their long-term going concern or the long-term growth. So these kind of things can happen practically. This is happening because of this separation of the ownership of the control. This is one very simple example. So therefore, managers trying to maximize their certain short-term benefits rather than looking at the long-term survival or the long-term objectives of the business. So then conflict can arise. So that conflict we call as the agency conflict. Agency conflict. In the agency conflict, there is a two versions. One is this agency shareholder versus management conflict. You can see the things I explained here. Shareholders are the owners. Directors are elected or selected by the shareholders. So they are the board of directors representing. Then managers are hired. Right? Managers we are hiring just for the monthly salary, monthly packages. So then, but in the corporation, managers are the parties doing the control. So then you can see the conflict can arise with the interest of these parties. So that is we call agency conflict or agency problem. Two versions are there. One is shareholder versus management problem. That is what I explained. Shareholders versus managers conflict. So in this conflict, who is the principal? Shareholder. Agent is the manager. So you can see managers are the agent, shareholders are the principals. Managers may make the decision that conflict with the best interest of the owners. So this is happening because of the separation of the ownership and control. I explained you one example. So why this problem? Because of this conflict, we have to bear certain cost. So that is we call agency cost. I'm reminding you, I have uploaded the reading chapters in the related to the every lecture. Previous one, this related to the introduction also, I have uploaded that relevant chapter. So these things are explained in there. So you should read as a habit. Please use to read, right? In addition to the understanding of this thing. So this is shareholder versus manager conflict. The other one is shareholder versus bondholders. This is also agency conflict. Who are the bondholders? Shareholders are the party or the people who provide the equity capital. They are the owners. Then bondholders who provide the debt capital. You know what is the debt capital, right? So capital structure of the company can be consist with two sources of capital, equity capital and debt capital. So equity capital come with the equity share, so we call they are the shareholders. So debt capital can be from the bank loan or the bonds, debentures, right? So in this conflict arise between the shareholders and the bondholders. So bondholders are the debt capital providers. What is the special characteristics or the special feature of the debt capital? Anyone? When it comes to the equity capital and the debt capital, what is the difference? Equity capital is the owner's capital, it represents the ownership of the business. Debt capital like bank loan, debentures, bonds. Huh? What do you mean? In terms of the risk, you can compare. If you rank these two sources of capital using the risk as a factor, who is taking high risk? Equity holders or the debt holders? Huh? In case of the company bankrupt, is affected more. Shareholders or the debt holders? Yeah, we know that. So that is one, you can compare equity and the debt capital using that also. But my question is, I'm asking, what I was asking, what is the difference between the equity and debt capital? How to interpret the debt capital? In case of the bonds, suppose the bank loan, yes, yes, interest. Interest is a fixed income. In case of the equity capital, dividends is not a fixed, it is variable. So therefore, this equity capital we define as a variable source of capital. Debt capital we define as a part of fixed cost of capital from the company perspective, fixed source of capital from the investor perspective. So now they are arising the conflict between shareholder and the bondholder. In this conflict, who is the principal, who is the agent? Debt holders are the principal, shareholders are the agent. There is an agency relationship again between the debt holders and the shareholders or the equity holders. In this agency relationship, debt holders or the bondholders are the principal, shareholders are the agent. Because you know that debt holders has provided some debt capital to the company. So shareholders are there as the owners of the company. So bondholders or the debt holders always expecting shareholders should act in the way that value of the bond or the attractiveness for this particular bond will increase. On that way, shareholders should behave. If I explain further, you can see this one. Normally, when a company is issuing bonds, there is a trading price, market price. For the bonds, there is a market price. After issuing the bonds or the debentures, these bonds are trading in the secondary market. For these bond holders, they can sell these bonds to another investor in the secondary market. Market price of this bond depends on happening or the things going on this particular company. If this company is going to a very risky decision, if they are going to invest in a very risky project, so then these bond holders perceive this as a threat to them. Because you know that bondholders are getting the fixed income. They are getting fixed coupon. So therefore, when the company is doing the risky investment, whatever the return receiving in the future will be benefited to the shareholders, not for them. Because they are getting only the fixed interest. Their company is covered for the වැඩිපුර ලාභ ලැබුවා කියලා එයාලට පොඩි වැඩි වෙන්නේ නැහැ because this is fixed. Right? When a company is doing a very risky investment, so these bondholders in the secondary market or the potential bond investor perceive this as a risky thing and they perceive this as a not a good thing. So as a result of that, when happening these kind of things in the business, in the marketplace, in the secondary market, price or the market price of the bond can be decreased. When the market price of the bond is decreasing, what happens to the bondholders' wealth? Their wealth is decreased. Right? So therefore, there is a potential conflict between the bondholders and the shareholders when the shareholders are taking certain decisions. Again, conflict of interest. Again, conflict of interest. Because they are always trying to either what we call the safe margin. මොකද මෙයාලට අවශ්‍ය නැහැ කම්පැනි එක ගොඩක් ඉන්වෙස්ට් කරන්න ඒක අවශ්‍ය නැහැ මෙයාලට උනේ එයාලගේ ෆික්ස් ඉන්කම් එක කවර් කරගන්න විතරයි. So therefore they are looking from that angle. Because but shareholders ලා කියන්නේ they are the risk takers. ඉතින් එයාලා බලන්නේ risk investment කරලා කම්පැනි එකේ value එක enhance කරන තරමට their wealth will maximize. ඒකට මේකන අපෝ conflict එකක් ඇති වෙන්න පුළුවන් between the debt holders and the equity holders when they are taking kind of decision in the way that affect to the market price of the bond value or the market price of the bonds in the secondary market. Therefore, when the market price is fluctuating, it is affecting to the their wealth. They are affected. So therefore, that conflict can arise. So this is the another version. Two versions are there. This is the one, debt equity holders conflict and the shareholder versus manager conflict. You can read this one. Just read. Bondholders, lenders provide long-term debt capital. Then the agent is the shareholder who should ensure that debt capital borrowed is effectively utilized without reduction wealth of the bondholder. That is the expectation. හිතනවා shareholders ලා එයාලගේ wealth එක maximize වෙන විදිහට මේ සල්ලි invest කරලා එයාලගේ wealth එක maximize වෙන්නේ. හැබැයි risky decision එකකට company එක යනකොට මේක මේ කියන තරම් simple කතන්දරයක් නෙමෙයි. ඒක affect වෙනවා market එකේ bond price එක decline වෙනවා. ඒකට මෙයාලගේ wealth එක so that create a conflict. Bondholders are the principal whose wealth is influenced by the value of the bond and the number of bonds they purchase or invest. An agency problem between the bondholders and shareholders will arise when shareholders take action which will reduce the market value of the bond and extension the wealth of the bondholder. So that is the very simple format of the bondholder versus debt equity holder agency conflict. So there are two versions, then agency conflict. One is shareholder versus manager. The other one is bondholder versus equity holder. Right. So what are the sources of agency problem? Now you can say why reason? Basically because of the separation of the ownership from the control. The other reasons are own utility. Managers are trying to maximize their utility, their wealth, rather than maximizing owners' wealth. They are looking at their survival, their incentives, their benefits, job security. So they are trying to protect them rather than thinking about the long run direction or the motive of the business. That is the one reason, on utility. And the other one, long run survival. I explained it. They are always trying to protect their job security. Then risky investment එකක් කරලා company එක bankrupt වුණොත් එයාලට එළියට යන්න වෙනවා. They have to, there is a risk of their job. So therefore, they are always trying to keep the their long run survival, protect their job security. So that is another reason. And consumption of the job prerequisite or the incentives. Yeah, what do you call official vehicles, official accommodations, other incentives, whatever. Education, training, whatever. Or they are trying to maximize these things rather than maximizing long run market price of the share. So then these are the some reasons of this agency problem. So you can read further that textbook. Cost of the agency problem. Why we consider this as a problem? Because it involves the cost. We call it agency cost. One is the restructuring. Because of this agency conflict, sometimes we have to restructure the business. Restructuring is a strategic decision. So restructuring involves certain cost, consultancy cost, some external consultant we have to hire, we have to prepare certain plans, documentation charges, certain things are there. So restructuring is a cost. So this restructuring cost will arise because of this agency conflict. In order to minimize certain agency conflict, board of directors may decide to restructure the particular company. So that is a cost. Monitoring. Board of directors or the shareholders are there for the long term to decide the long term direction of the business. So they are not trying to involve in the bottom or the day-to-day happenings or the operating activities or the normal operations of the business. But because of this agency problem, what is happening, board of directors have to monitor what is doing by these managers. So that involves certain time consumption. So this time they should have to use for the long run strategic planning to decide the long run strategic model of the business. But anyway, because of this conflict, so shareholders or the board of directors monitoring these managers, operations. So that is there is a large opportunity cost of time. Again, මෙන්න යාලට අර long run strategic view එක disturb වෙනවා. So that is explaining this is as a problem or the cost in the agency conflict. Bonding. You know that when we are recruiting the managers or the top level managers, we are signing certain bonds, agreement, contracts. So because of this agency conflict. So this is bonding again cost. We have to pay legal fee, documentation charges, stamp duties, so whatever. So that is a cost because this is a rise because of this conflict. And also this auditing. Why we are doing the auditing? The financial statement prepared by the accountant of the business, we are auditing, we are doing audited by external parties. Why? By using an independent body. Why? What is the reason? Because of this agency conflict. In order to assure their accuracy and the transparency, so we have to monitor, we have to audit them by using the independent people because of this agency conflict. So my auditing fee, auditing cost is arise because of this conflict, auditing. Lost opportunities, as I explained, because of this malpractices or these misbehaviors of the managers, ultimately company would lose good investment project because of their pretension or their showing this not a good doing a window dressing and kind of thing. Ultimately, we will lose a good business investment opportunity. So therefore, in the long run, the company will go to the decreasing in the growth. So then market price of the share will decline. So when the market price of the share is declining, wealth of the shareholders is decreasing. So when the company market value is declining, there is a threat of acquiring. What is the threat of acquiring? When the market price is decreasing continuously, rival company, competitor can acquire the company. So that is actually the corporate control of the agency conflict. You can see it is line as a corporate control lever. How to manage this agency conflict through the corporate control. through this corporate control, there is a threat of acquiring. So when the company is acquired, existing managers sometimes may have to go with. There will be a certain restriction for the existing management. So that is a problem. So therefore, because of this corporate control, management may sometimes, as a fear to happen in this kind of things, they will doing they are doing the good behavior to minimize the agency conflict. And also you can see remedies. Incentive can be aligned with the management and the shareholder interest. You know that we can provide employee stock option. We can give the share ownership to the management. There are certain kind of things. So then managers will become the owners of the company. So then they will motive to maximize their wealth, and then so that happening, that is affecting to minimize the conflict. We can give the share ownership of the company. Incentive need to be structured carefully, make sure they achieve the goal. So we can connect the incentives or whatever the increments to the achievements of the goal targets. So then they will be motivated to achieve the certain targets. So we can do kind of thing. And also the corporate control. Corporate control, threat of takeover may result in the better management. With the fear of this threat of control, there will be a good management, because if it is acquired by the competitor, there is a large risk of the job to the management. So therefore, they are not trying to happening. They are not trying to allow happening kind of thing. So certain remedies, there are more. So this is the agency conflict. I think it is clear. Agency conflict, agency relationship, two versions of the agency conflict, process, and the limits. You have to read that down. Any question? Any clarification? I think I want to explain this one also. Agency relationship and the stakeholder theory. What is this stakeholder theory? Can anyone tell me the difference between the stakeholder and the shareholder? When we say the stakeholders, what is it? Difference between the stakeholder and shareholder? Stakeholders mean all the parties. All the parties interested to the business, including shareholders. Okay? Including shareholders. So this stakeholder theory says that there is a conflict between the shareholder wealth maximization and the stakeholder theory. Because according to this stakeholder theory, it says a firm should create value for all stakeholders, not just shareholder. That is the core. Right? In that theory, it says that firm or the business organization should create value for all stakeholders, including employees, suppliers, customers, government, potential investors, shareholders, including every interested party. Not only the shareholder. That is the stakeholder theory. But anyway, the stakeholder theory is not, there is no any contrasting impact from the stakeholder theory to our objective of financial management. If you remember the previous last week discussion, I explained you when the shareholders' wealth is maximizing, ultimately when the market price of the share is increasing, I told you that all other stakeholders are achieving their objective. When the market price of the company is increasing, there is a good profit. There is a good cash flow. Employees are getting satisfactory salary. And also the company is producing a quality product and service. They are not damaging to the environment. They are contributing to the society. They have a social responsibility activity. So likewise, everything is going in the positive way. Right? Maximizing the shareholders' wealth or the maximizing market price cannot be happening overnight. It's not a kind of thing that the finance manager cannot manipulate. I told you that it is happening with the demand and supply pressure. Normally, demand for a particular company is increased when this company is performing well. in every aspect, not only the profit, qualitative and quantitative both, right? So therefore, according to the stakeholder theory, it says that we should consider all the stakeholders. Yes, it is correct. It is correct. There is no any conflict, the stakeholder theory with the objective of financial management. Because in general, there is a harmony with the interest of all the stakeholders. When we are achieving the shareholders' well, there is a achievement of the all stakeholders' expectation. So therefore, that I want to show you. This is aligned. This is consistent with the stakeholder theory. There are certain arguments that stakeholder theory, which says that it considers all the shareholder. Yes, that is our objective. But when we are achieving this objective, all other stakeholders are achieving their objective. Right? So that is the answer. And also, and the other thing, risk return trade-off. This is also, you should know, I think I skipped that slide. Risk return trade-off. What is this risk return trade-off? Normally, what is the relationship between risk and return? What is the relationship between risk and positive? Positive means higher the risk, higher the expected return. Now, suppose that you have 1 million with you. You are going to invest. There is an alternative. What are the available alternatives? You can put a fixed deposit. Yeah. You can invest in the share market. What else? You can invest in the bond. So like this, alternatives are there. Suppose you are going to select investing in the treasury bills or the treasury bonds and also the stock market, CSD, and also fixed deposit. Right? Suppose you are going to invest for 1 year. Your expectation for the investment for 1 year. If you are going to the treasury bill for the 1 year investment, suppose your rate of return around 9%. If you invested in the CSE or the stock market, your expected rate of return say around the low speed 15%. If you go with the fixed deposit, it is 12%. Now, different source of investments are having different rates of returns. Because of what? Because of risk. Now, suppose here, stock market investment, expected rate of return also 9%. As an investor, are you investing in the stock market? No. Because you know that if you invested in the stock market, this expected return is very uncertain. So you are expecting dividend and capital gain, or this is the expected return. But this is very uncertain. It depends on the economic condition happening in the company, happening in the economy, everything. A lot of things are affected. But if you invested in the treasury bills, this 9% rate of return is confirmed. You will get definitely because this is issued by the government, not any default risk. So therefore, if the expected return in the stock market, there is a fundamental issue, cannot be like this, right? There was a time happening like this. If you remember, in the previous, during 1 year's time, there was happening kind of thing. Stock market return is 9%, treasury bill rate of return around 26%. Yes, that was happening. Not much may happen. Because I also invested in the treasury bills. 26% I invested. At that time, fixed deposit went around 9%, 8%. Stock market back out. So no any fundamentals. Because this is happening with the COVID. And this economic crisis, we went with the bankrupt and the economic crisis kind of things happened. At that time, this money market instruments, rate of return increase, right? But anyway, this is the anomaly, right? This is not a fundamental thing. So what I want to say to you, there is a risk return trade-off. If you are going to invest in the stock market, your expected rate of return is greater than the investment in the fixed deposit scheme. Suppose this is the NSB bank fixed deposit, government bank. Related to the stock market investment in the fixed deposit NSB is this low. So therefore your rate of return 12%, but if you are going to here stock market, your rate of return should be greater than all other alternatives, as you mentioned, because of the risk. There is a risk return trade-off in every investment, financing, dividend, whatever, every decision we are taking as a finance manager. So this is the investment decision, personal finance, even in the business finance, we have to take that. Your required rate of return, normally, in future we are discussing this thing, right? Your required rate of return is equal risk-free rate of return plus risk premium. This is the formula. Risk-free rate of return for your time value of money, our next topic. For your time value of money. So here, this specialty rate of return is the proxy for this risk-free rate of return. Right? So then 9% plus something for the risk premium. So risk premium here should be greater than the risk premium included here. Because you know that if you are invested in the stock market, it is the risk. In case of the economic, whatever happens, your rate of return, expected return, you may not receive. So therefore, this is very uncertain investment. But anyway, higher the risk, just think about the other side of this one. Higher the risk, higher the expected return. Lower the risk, lower the return. Because there is a trade-off between the risk and return. Risk and return going with the tender, there is a positive conflict, positive relationship. Higher the risk, higher the expected return. So therefore, your risk premium should be a large value, large now, compared to the fixed deposit investment. So this is explaining here. Now you can see in this diagram, this is the risk-free. This is the risk-free level. You can see irrespective of the time, risk-free rate of return remains constant. It's not affecting with any risk factors. Because government pressure bill issued by the government. Theoretically, fundamentally, we believe government cannot be default. But it happened. But anyway, theoretically, we believe there are no possibility a government going to default. So therefore, we define this as the risk-free rate of return. Only the default risk, right? In addition to the default risk, there is a reinvestment risk, foreign currency or the foreign exchange risk. Certain other risks are there, market risk is there. These factors are affecting, but only the default risk here, zero. Default risk only, right? So then you can see the risk premium. So this is the risk-free rate of return level. So then risk premium consists with the risk of this particular investment should be increased. In the risk and return, we have discussed this thing again. But anyway, you should understand this risk-return trade-off. Higher the risk, higher the required rate of return, higher the expected return. Because higher the risk, your risk premium should be higher. Right? So that relationship you can identify. So because of this risk-return trade-off, different assets are having different rate of return. You can see that 9%, 15%, 10%. Different rate of return. You are investing for 1 year. Different rate of return because of the risk. Right? So the risk-return trade-off is a fundamental thing in the financial management. If you look at this top diagram, every decision, investment decision, financing, liquidity, dividend decision, liquidity between working capital management decision, all are affected with the risk return trade-off. Right. I think this is the end of the introduction. So we discuss if you go to your learning outcome, learning objectives, you can check whether you achieve them. We define the finance, you define the business finance, you identify the key decisions in finance, role of finance manager, objective or the goal of finance, and finally the agency conflict. Right. Any question? I think I have uploaded certain two cases related to this introduction. One is this, you can do this one by yourself, nothing here, right? Simple case related to the introduction. Right? If it's asking, you have to identify sources of financing, uses of funds, what are the investment in the financial assets, what are the investment in the real assets. Can anyone tell me the difference between the financial assets and real assets? You have to read this case and you have to look at them. What is the difference between the real assets and the financial assets? Yes, you know. For sure, I know you know. What are the real assets investment? Investing in the assets such as real assets, financial assets. Huh? High. Tell out. Example for the real asset investment. දන්නා කියන්නේ කිසි දෙයකට බයින්න එපා වැරදුනට ප්‍රශ්නයක් නැහැ. Huh? Investments in the real assets. Investment in the building, machines, vehicles, like the real that is the real assets investment. Financial assets. Shares, bonds, debentures, treasury bills, bank investment, everything are the financial assets. So you have to read this case and you have to identify how this particular company, this is very simple one, I am not taking time here. So you have to identify what are the real assets investment there, what are the financial assets investment there, and also their capital structure. What is the capital structure? How they finance their total assets fund requirement by using what? Bank loan, equity shares, debentures. So you just identify the capital structure. I'm not taking time. And also this one, this case, text part. Yes, this is related to the agency conflict. By reading this case, you will identify practical happenings in this agency conflict. Right? So you may read it and try to understand the problem here. And also there is some recommendation given by the consultants group. So you have to critically evaluate that. How might the revised compensation structure impact on the long-term strategic planning and innovation? Because of the time, I'm not taking during this classroom time, but you can do it later, right? Okay? Because if any, once you are doing, if any questions, any unclear thing were there, you can talk with me. In addition to that, you have a tutorial. There is the tutorial. Did you see it is uploaded to the LMS? This one. You have to answer. Lot of things are there, right? Homework. Very easy. This one. That is very easy. But anyway, you have to read the reading chapter and this tutorial. You have to answer them. Otherwise, you might not answer the question in the paper. So therefore, just look at the question. Very simple, right? If you look at this, differentiate between finance, corporate finance, and business finance. We discuss. We discuss. And also, how does the modern finance manager differ from the traditional finance manager? I explained it last week. Right? The traditional finance manager was with the profit maximization. Now it's not the profit. Now we have to create value, wealth. Now it's a very dynamic function. In the traditional, it was a very routine. Preparing financial statement, accountant give it but now there is a separation between the controller and the treasurer, accountant from the finance manager. We discuss these things. Right, you can do, right? You can, if you look at here, there is an inseparable relationship between financial management and other functions of corporations, such as production, marketing, HRM, etc. Do you agree with this statement? Yes, we agree. Right. Just to refresh you, just read this question number 12. I think you can look at from the LMS also. Read the question number 12 and try to answer. Whatever. You can even answer quickly. Question number 12. Is it visible? This one, last one. Quickly, 5 minutes. Three questions are there. Risk and return is calculated. Sorry, no. Now 15% of the based on the expected earnings in the economy with the probabilities which can be forecast. We discussed the portfolios. Quickly, right? Safety First PLC is one of the largest automobile safety belt manufacturers in Japan. 2 years back, Mr. Aman was recruited as the finance manager of the company. During the past 2 years, under the guidance of the new financial manager who loves to build empire in different businesses, Safety First PLC has diversified its business by establishing different business units. The company is now facing financial difficulties and has not been able to achieve the expected growth in cash flows. While investigating this decrease in performance, it was found that some new business units are not functioning to generate cash flows as expected. And more importantly, Mr. Amal has manipulated some proposed investment budgets to make them attractive to be accepted. Further, there is a complaint from other managers that Mr. Amal is obtaining undue benefits by way of foreign business tours, accommodation, and planning business meetings at luxury resorts at the cost of the company. Very simple case. What are the symptoms and what is the actual problem that Safety First PSC is currently facing? Explain the reason for this problem. What are the strategies would you suggest for Safety First? Resolve this problem. Any answers? This is a case study. There is no any hard and fast answer. You can answer like 2, 3. First question. What are the symptoms and actual problem? Symptoms is you can see, no? Symptoms like what are the symptoms here? new established units are not performing as expected. No, that is symptom. They are happening, they are not functioning well. Generate cash, they are not functioning to generate cash flows as expected. That is a symptom. What else? Any other symptoms have you seen here? Any other? What is the real problem? Actual problem here? Huh? Shareholders? Yeah, one term for that. What is the actual problem? Agency problem. There is an agency problem. Symptom is cash flow problem. You can see, I don't see anything other than that. That's all I think. What is the real problem? There is an agency problem. Agency problem. That is what you are explaining. Using one term, you can define it. That is the agency problem. Explain the reason for this problem. What is the reason? What is the reason? Oh, what is the reason for this conflict? This is happening, the conflict of interest because of what? Huh? Yes, because they are trying to maximize not the shareholders' wealth, but their own. So this is, yeah, this is okay. What is the reason for that? I explained. Yes, separation of ownership and control. That organization structure. Because of that separation of ownership from the control, the conflict of interest is. ඒක වෙන්නේ ඒක separation එකකින් තමයි. Because managers are the decision makers. ඒකට තමයි proposal create කරලා තමයි present කරන්නේ, එයාලා තමයි cash flow estimate කරන්නේ, feasibility එක පෙන්නන්නේ, LTV එක calculate කරන්නේ, මේක හොඳයි කියලා get. So they are doing lot of things. They are in the manager, they are in the control. But owners are there, management is separate. So the reason for this conflict or the problem is, one, we can say separation of ownership from the country. You can elaborate it, no problem, but this is the thing. Third one, subjective. It's subjective. No are very fixed answer to that. What are the strategies you suggest to safety personnel to resolve this problem? You can suggest, open-ended. Yes, acceptable. We can say like this, we can encourage directors to provide shareholdership for the manager. What else? Yes. We can take Amal by the that is also possible. We can file up the Amal. Because there is problem with Amal, is using undue benefits in this project. Is it misusing the cash flows of the company? So we can hire and fire. But yes, that's open. You can write anything. For the exam, for this time, I will call the case study for the introduction. Yeah, you are confident that the exam we do the case study for this introduction. You can see my question papers. Simply not asking great question. Since you are a accepted group, so I have to prepare some standard question. It is told by this coordinator also. Actually, ඉතින් මාගේ පළවෙනි දවසේ වල මිටිපොය දැක්කම මම ආවේ ලොකු එක්ස්පෙක්ටේෂන් එකක් තියාගෙන. But but anyway, right. So then we are going to the second financial market. I need to disappointment. Right? Last week I told you, I don't know where the name. I told someone of you, and I gave my mobile number also to provide the group details. Other remember really right? Right? Because I thought to discuss these financial market related things as a group activity. But anyway, interest only. So that is one of my disappointed at very beginning. Right. Any question on the introduction? So we can go to the financial market quickly, and then we can start time value of money. That is the beginning of financial management or the business finance. Any question on this? Any question, any clarification? Right. So then we are going to the second topic, financial markets and the environment. Actually, at the, as I mentioned in the last week, in your evaluation, there is a group presentation for 20 marks. 10% for the presentation, and another 10% is going for the individual assignment. According to your course outline, it was mentioned like this. I told you that individual 10%, that individual group assignment 10%, I am collecting with the 4 quizzes based on the classroom quizzes. Probably after finishing the time value of money, you will have the first quiz, probably on the 21st August. For that week, I will announce. But that group presentation based on financial market, financial environment, developments in the financial market. So I need your groups. How many groups are there? Around? Because I think you have a certain group activities, no? Huh? You know, so already formed groups might have there, no? Huh? No. Right. Okay, anyway, I need to, I'm not going to make the groups. You can connect as you wish. So you may prepare. How many students are there? 25. 25, 29 more minutes. So you have to form the groups. You may inform me. So I will allocate some topics. That is based on this financial market, environments, development, technological things, all. So you have to prepare the group report as well as you have to do a presentation for these 30 marks. Right? So that is the way of getting that group assignment and the group presentation content. I told you in the last week also, around 29, no? 28. So 28 main max. Keep करना. Right, I will make. इधर exactly इन्ना गाने वाला है मदा सन्ना है ने. एना individual assignment करना है अंडे. Visa. I think you prepared to group 1, no? Huh? Right. Okay, I will talk with the coordinator. May I form the groups? Is it okay? Right. I will ask them and the help of the coordinator, I will form the group and I will indicate, I will give the title of the your group content and the title and everything. So you have to present that particular phenomenon either as a role play or the whatever mode of thing you can use. Formal presentation, or you can use a small role play or the drama, whatever way. Suppose for the example, that is green bonds. So then you have to explain what is green bonds. You have to present. I will give the content. So on that content, you have to prepare the presentation. We will happening during the class time. So we will give the 10 marks for the presentation, 20 marks for the group report. Right? So that is based on this financial market, technology, environment, and everything. Okay. So when it's come to this financial system and market, basically we discuss these things. I'll go quickly on this, right? Because you have to read this thing later. This is not in the classroom. This is outside the classroom. In order to get touch with the markets and the happening developments, you have to read. You have to look at the websites happening in the world, global context, right? So therefore, I'll go quickly. I will provide only the framework, certain things. So it's your responsibility. You should read provided sources and the web links, and I have given some certain links, websites. So you have to read because a lot of things are there, developments. Basically, we cover these things: financial system in Sri Lanka, components in financial system in Sri Lanka, stock market, and global financial environment. Is there is internet? You can go to central bank website also. Right. So what is the system? What is the financial system? You know that when we say a system, it is an interrelated, interconnected uh, phenomenon we call as a system. So then what is the financial system? Financial system is also consists with the certain components like financial market, financial instrument, financial infrastructure. So likewise, certain components in Sri Lankan financial system also to provide financial intermediation. Right? I think there is a definition: financial system that consists financial market, instruments, intermediaries. So they are influencing directly as well as indirectly to the other components. So to maintain the smooth and mobilization within the economy. So if I ask a question, what is the purpose or what is the aim of the financial system? That is intermediation. One term, intermediary, so intermediation. So what is the intermediation? Intermediation means transferring funds, moving funds from the surplus units to the deficit unit, we call as a intermediary. Right? Financial system can be defined as a set of interrelated, interdependent components which work together to channel funds from the surplus parties to deficit unit. So that is we call intermediation. Now let's look at like this. Suppose when you have some extra money, normally we used to put a fixed deposit. That is happening. So then when I put my extra or the surplus money in the fixed deposit in a bank, so another person is coming to the bank asking some money. So then this bank is using my money to provide the loan for that person. So that is the intermediation. Moving funds from the surplus units to the deficit unit. So bank is a intermediate, doing the intermediary function. Bank, financial institution, insurance companies, everything doing this intermediaries that are included in the financial system. So ultimately, what is the job? What is the role of financial system? That is intermediation. In a system that consists, I explained this one. So simply, I think you can understand. So this is the financial system of Sri Lanka, not the US. This is our financial system. So our financial system consists with the components. This is Central Bank of Sri Lanka. This is the apex institution, controlling, monitoring banks, financial institutions. So that is we identify as the main or the apex institution in the financial system. And also there is other regulatory bodies. Can I have some example for the other regulatory bodies? Apart from the Central Bank of Sri Lanka? Other regulatory bodies in the system? Huh? Yes. Securities and Exchange Commission. So that is the regulatory body of the Colombo stock market. And insurance companies are regulated by insurance board. I think that is not now insurance board. It has changed to the statutory or something. You have to search it. Now there is no insurance board. It is dissolved. Now there is a new organizations doing the same thing, but the term or the name is changing. I will show you with the website even. And also then Ministry of Finance, government, and also what do you call this? Stock brokering companies is controlled by the Securities Exchange Commission. So these are the other regulatory bodies. They also monitor certain financial institutions, instruments. So these are the other regulatory bodies. Then financial markets. We will discuss this thing. You can categorize in the different way. And financial instruments, financial institutions, and the infrastructure. Infrastructures like platform, technology, system. They are in the financial system. Today you are going to the PET machine, you start your withdrawing. Once you withdraw, your account is deducting that amount. So that is happening with the infrastructure, technology. So you have to read this thing. All these components or the content are extracted from the central bank website. If you go to the central bank website, you can see anyone who is reading the central bank website normally has a habit, because it is very important, informative website for you who are doing subject like finance, business finance, because that is every day, daily, not even daily, hourly also it is updated. If you go to this website, you can see this is the web page. This is you can see this one. You can read this either English, Sinhala, or Tamil. You can access with the any language. If you go to here, you can see this is the financial system of Sri Lanka. The content of this PowerPoint presentation prepared based on these facts, information. If you go to the financial system, you can see it is explaining banking sector, leasing and financing sector in the Sri Lanka, private dealers, microfinance, non-banking, money brokering industry. So then microprudential surveillance aspect. This one is the new thing. Very recently, this icon came to the website. Sustainable finance. Right? You can see now banks are doing digitalization. They are not providing certain statement hard copies. So certain things are happening in the Sri Lanka also. If you go to this one and click, you can see central bank innovation on this area. Sustainable finance. See here, activities of the central bank. Right? I'm not going to read this thing in here. So it's up to you. Read and understand. It is there in Sri Lankan Sustainable Finance Roadmap. Please read. Please read. When you are doing the research, this is very good area for the research. Read finance taxonomy, banking sector direction, read finance activities in Sri Lanka. For your assignment, group presentation, you have to read them. Right. So then if you go to the financial system, you can see financial markets. Infrastructure, and also instruments. All these content are included in this PowerPoint presentation. Actually, no need to discuss this. You can read and you can understand. This is nothing here. All the things are explained. If you go to the banking sector, How many licensed commercial banks are there in Sri Lanka? Up to date? Around? Look at the updated information is there. How many licensed commercial banks are there? You can click here. Around 24. So these informations you have to touch. And also if you go to the home page, here in the home page, look at, tell me the today's inflation rate. What is the number? Huh? 2 point? Here, minus then. I think according to this now, take a minus one of that. Then let's see what is the inflation. 2.4. According to the records, it is 2.4. I don't know, really it is happening. This is our inflation. What a developed country are we? So you can see policy rates. This is the, if you are going to deposit around, you can take 8.25. Now treasury bill market is increasing. This time I think it shows greater than this 8.25. Again, it's going against the fundamental. Treasury bill went 9.25 very recent in the last auction. Right? So this is your responsibility. You have to read them. I'm not going to use the time over here. Let's look at my presentation. I will give some brief overview about this system and the things. So this is our system, financial system. Then these are the financial institutions. As I show you the website, all this from the website. Please read them. What is doing this financial institution in the financial system? Intermediation. So that is moving funds from the surplus units to the deficit unit. So that is the intermediation. So if you look at this licensed finance companies, specialized banks, leasing establishment, primary dealers. Tell me who are the primary dealers? What is their, because you know that commercial bank, specialized bank, finance companies, you know what is they are doing. I'm not asking because it is insulting for you. So what is this primary dealers? What is they are doing? What is the special thing with the primary dealers? අපි සිංහලෙන් කියනවා ප්‍රාථමික වෙළඳ primary dealers ලා. What is they are doing? Anyone? Who are the primary dealers? කොච්චරක් ඉන්නවද අපි? Mainly they involved in what? Huh? Yes. Just tell me. Don't worry. So then I can understand your level. Primary dealers are involved in yes. Let's see the coordinate. Primary dealers are doing what? Mainly, what is their main thing? මොකක්ද එයාලා ප්‍රධාන වශයෙන් කරන දේ මොකක්ද? Especially primary dealers are for what? Yes, you know. Hear me? Just tell me. Yes. And commercial banks, not loans, not what you could give. Okay. But it's some of the primary dealers. Choose shares. මොකක්ද එයාලා shares issue කරන්න දෙන්නේ මොකක්ද? Why? What is shares? Which shares? Yes. Now suppose you want to invest in the treasury bills. You told that you are investing in treasury bills. You want to invest in the government treasury bills. All the commercial banks are primary dealers. In addition to the commercial banks, there are, I think, 5 or 4 special primary dealers. If you go to the website, look at all the commercial banks are primary dealers. Go to the system, primary dealers, licensed commercial banks, and dedicated primary dealer companies are there. In addition to these all 23 commercial banks, there are some primary dealers. Look at the list. Here, there are, I think, this is perfect. This is also suspended. Do you remember? This is suspended. Perpetual treasuries, මතකද case? Now it is suspended. Pan Asia may primary dealing activities suspend kara around made recently. Look at this is updated. Business activities of primary dealer for period of 6 months. Very recently happened this. එයාලට දැන් primary dealing කරන්න බෑ Pan Asia Bank එක. Now this is Wealth Trust Securities. This is not a commercial bank. This is a dedicated primary dealer. So then this is primary Srilanka Bank, People's Bank, NSB Fund Management, Equity. These are the dedicated primary dealers. Equity and First Capital. This is Entrust. ළඟදී ආපු එකක් මේක formerly selling caution කියලා තිබුණේ. So we got to update it with. My question is still there. What is they are doing? Huh? Yes. If you need to invest in the treasury bills, you can't go to auction. You have to go to the primary dealer. So you say, I have 1 million, I'm interested in investing in the PV or the treasury bill. So you have to go to the primary dealer. So then primary dealer on behalf of you going to the auction in the central bank. 2 days per week, they are happening the treasury bills auction. Recently, there was no treasury bill auction. I think last week it was there. So then in the auction, they are purchasing treasury bills on behalf of you. They are the main task. Primary dealers are the institutions involved in the government treasury bills investment, right? So you have to read them, right? So if you go to this slide, I think you can see it is there. The primary dealers. In the primary, so I will come to this one later, right? Because I want to explain the market first, no? Right. So this is the institution. Please read, right? Take time and read because I can't explain everything. So then I'm going to the financial market. Financial market. Financial market we can categorize in the different way. Different way based on the different characteristics. So you can see certain classifications are there. Term to maturity. Based on the term to maturity of the financial instruments, we can categorize financial market as money market and capital market. Money market and capital market. So what is then money market? Money market is the market where short-term financial instruments are traded. Short-term mean maturity less than 1 year. So what are the instruments? Money market instruments. So then what are the money market instruments? Treasury bills, savings deposits, commercial papers. They are the money market instruments. So money market is the place where the short-term financial instruments are traded. So then what is the capital market? Is the place where the long-term financial instruments, that is with the maturity greater than 1 year. Bonds, debentures, equity shares, preference shares, treasury bonds. What is the difference between treasury bonds and treasury bills? I hope you know it. Huh? Yes, bonds are long term. There is another difference also, but anyway, treasury bills is a short term instrument. Treasury bonds are the long term. So that is money market and capital market. based on the term to maturity. Then again, you can categorize financial market as the primary market and secondary market. What is it? Anyone who know? Primary market and secondary market? Primary market is the market when an instrument is traded at the first time. We call it as a primary market. Right? If you invested in the corporate bonds, when the company is issuing corporate bonds at the initially, so then we call it as a primary market. So then what is the secondary market? After you invested in bonds, suppose when the DFCC bank is issuing their debentures, you have purchased 8,000 debentures. So that market is the primary market. Now you have 8,000 debentures with you. So you want to sell this debenture to another investor. So then what is that market? Secondary market, right? So already traded instruments are trading between investors in the secondary market. Only in the primary market, issuer or the issuing company is getting the cash flow. You may understand that difference, right? Only in the primary market, issuing company is getting the cash flow from the investor. In the secondary market transaction, through the secondary market transaction, company is getting nothing. Company is getting nothing. So then, since you are a matured students, if I ask a question, does the secondary market transaction is, so in the secondary market transaction, company is getting nothing, right? Because only between the investors, instruments are trading. So if I ask a question like this, so therefore, is it that happenings in the company? You know that company is functioning, company is doing their operation. Does the company is happening impact or affected to the secondary market? Did you get my question? I'm asking happenings in the company has any impact on the secondary market transaction? Yes or no? Huh? Secondary market is place where the instruments are traded between the investors. That is in the secondary market. So my question is, the trading in the secondary market, is it impacting with the company performance or company activities? Is there any impact the company activities on the secondary market? Huh? Yes or no? Confidently? Yes or no? Huh? No? Huh? No clear problem? Huh? They have a problem about you are. But I guess the laser want to break the table and then don't break it. Right. Yes, exactly. The secondary market transaction is affected by the company's happening. Right? In the secondary market, if the demand is increasing, in the first lecture I told you, when the demand is increasing, it means that somebody is effective. Somebody is doing the business in a good way. They are performing well. So then potential investors, existing investors, they are trying to invest in this particular company. Though company is not getting any money, any cash flow, but they are shortly, their happenings, their activities impacting immediately in the secondary market. And also secondary market activities is affect to the primary transaction also. In the secondary market, when there is a high demand pressure, so then company can do another primary, season primary issue. Right? We call that first time when the company is issuing shares to the general public, we call it as a primary issue. For the second time, if company is issuing another number of shares to the general public, we call it as a season offering. For the second time, then, company is stock market. Stock issue initially to the investor. So that is we call season offering. So then, when the secondary market is, when the investors are very attractive in the secondary market, if company is going to the season offering, So they can subscribe, they can take the all investors as they expect. So that is happening. Those are interconnected, interrelated. No isolatedly, any market is functioning. So that is the second category. Next one. Based on the nature of financial instruments. Nature. You can categorize as a debt market, debt instrument market, and debt and capital market. Based on the nature of financial instrument. So in the debt market, fixed cost or fixed return instruments are trading. In the capital market, variable return or the variable return instruments are trading. So that is the based on the nature of the financial instrument. If the investor is receiving fixed cash flow, like in the debentures, bank loans, preference shares. So these are debt market instruments. So only in the capital market you can see equity shares, because for the equity share, dividend is not fixed. Equity share for the equity shareholders, they are not getting fixed dividend. There are some years large amount of dividends. There are some years no any dividend. Company is not paying any dividend. There is no fixed dividend, so that is capital market. That is capital market. Only one instrument is there. All other instrument, treasury bills, treasury bonds, debentures, commercial papers, fixed deposits, all are under the debt market instruments. That is based on the nature of the financial instrument. And another classification that is based on the distribution of financial instruments. Call money market and future market. Based on the distribution of financial instrument, if you are going to invest in a particular instrument, just now, we call it as a spot market even. So that is we call call money market. Immediately if you are investing, so that is a call money market. Future market means suppose you are taking some agreement, contract to invest in 6 months. So that is a market we call future market. So that is also another classification. Now, distribution based on the distribution of financial instrument, you can categorize call money market and the future market. Call market is the spot market. Immediately transaction is happening. Future market means in future date with some contracts. So likewise, so that is we call futures market. In the option, futures, forward contracts. So these are coming under the future market instruments. So all other instruments like stock market is a call money market because transactions are happening immediately. Another classification you can see based on the organization of the market, you can categorize option and OTC market. Now, if you look at our Colombo stock market, it is an auction market. So what is then OTC market? That is we call over the counter market. So that is for the actually for the not well established companies. They cannot listed in the main exchange. So then they are initially listing in the OTC market. So OTC market is connecting with the technological instruments and using the technology, dealing with the technological things. So initially company before going to the established auction market, at the OTC market, they are doing the trading. So that is we call OTC market. In the world, the largest OTC market is NASDAQ. Anyone is here at the NASDAQ? You can search this one in the UK. NASDAQ is a large OTC market. And company stocks are listed. Dealers are connecting with the technology, instruments, internet. They are trading using this technology. So that is the largest OTC market in the world, NASDAQ market. So these are the different classification. So let's look at, I think no need to explain again. This is money market and the capital market. In Sri Lanka, our financial system, money market has four components. These are the elements, or these are the sub markets in the money market. Money market is the place where the short term instruments are traded. So money market affected to the liquidity of the country, short term liquidity of the country. So you can see different types or the segments in the money market. Interbank call money market. Are there anyone working in the banks? Banks වල වැඩ කරන අය කවුද? What is your bank? Good. Commercial bank කියලා කියන්නේ highly මේ digitalize වෙලා තියෙන මේ sustainable පැත්තෙන් green පැත්තෙන් උඩරම ඉන්න bank එකනේ. So you can explain everything. There is a project also with the commercial bank. Good. Then අපිට support එකක් ගන්න හැකියි. What is this interbank for money market? Can you explain it? This is the segment in the money market. What is this? Interbank for money market. Is language. Just explain what is this? What is the interbank for money market? Interbank for money market. Checks की तरह transaction करें इसी तरह interbank for money market. I will give the 10 minutes break. I will give the 10 minutes break. After the 10 minutes, you have to explain what is this interbank for money market. You can search in the internet. You can follow this interbank website, or you can talk to the manager in the bank. This about 10 minutes. Like 10 minutes to break that down. Within 10 minutes, come back. We might be even come back to the 10 minutes. Quick change order. You have to present what is the interbank for money market.
මගේ නම නෙමෙයි මම මේ සක්විතාට කිව්වා මේ ඒක ලියන්න එපා කියලා තියෙනවා නම සයින් කරේ නැහැ කියලා
මුලට යටින් ලියන්න එපා කියලා කිව්වනේ. ඔයා ඒක තියාගෙන නැහැ. මෙතන කව. ඔයා හැබැයි යාඩම තමයි පොඩ්ඩක් කියන්න ඕනේ.
එයාට මම මෙසේජ් එකක් දැම්මා එයා
ආවද මේ සතිය ආව කියන එක නම් මම දන්නවනේ.
සයින් කරේ නැහැ ඒකින්ද ලියන්න එපා කියලා.
තියෙන හින්දා නේ මේ මෙතන යට කවුරු හරි ඉන්නවද දැන් ඔෆිස් එකේ චුට්ටක් අහන්න ඔය කිව්වට දැන් මෙතන කිව්වට ඔව් students are not allowed to add names in struggle.
ෆෝන් එකක් දුන්නා ආන්සර් කරේ නැහැ.
ආයත අපේ අමසල්සද උදේ වලට ටිකක් සෙලෙක්ට් කරගන්න ඉතින්. ඔය චුට්ටක් මෙතන ඔෆිස් එකේ බලන්න බලලා මේ මොකක් හරි නැත්නම් මම ඇෂුවර් කරන්න ඔය අවල ඇටෙන්ඩන්ස් බලන්න. ඒක තමයි මට කිව්වේ ඉරි ගහන්න කියලා එන. I30. Right. 10 minutes over it. Right. What is the interbank call money market? Just tell me. Yes. What is the interbank call money market? Only this happening there. Yes. Yeah, correct. Okay. Anyway, read that central bank explanation, right? Interbank call money market, normally you know that commercial banks, they are doing deposits and lending in their operation. So normally banks are closely at the account. I went on, but I did. The balancing, there is a withdrawals, there is a deposits, you have given some loans, there, inflows, outflows are there. So when the inflows, outflows are not balancing at the end of a particular transaction day, end of a particular day, what is your day? Suppose now you are in commercial bank, you have a deficit. So immediately you are normally not the call in the system. Banks see the excess of funds at the end of the day. They are displaying. They have certain money in excess. This is the rate, right? Suppose HDFC Bank has some excess money. So they are put the message in the system. We have that much of excess money. So you can borrow at this rate. So if you are interested to borrow from the HDFC Bank, so then you can get that money for overnight. In order to settle this mismatch of the deficiencies of the happening in the daily, in the cash flow. So then you are borrowing at the HLP bank. So at the next day, you are settling it. So that is we call in the bank call money market. In particular day, suppose all the banks, 23 commercial banks, all the banks run with the deficit. What would happen? There is no any bank with the surplus of the funds. All are with the deficit. So then what is the last result? Central bank is here. So then you have access to the reserve of the central bank and you have to borrow from the central bank. There is a facility for standard facility lending and facility demand deposit and lending rate. So at that rate you have to borrow. In the next day you have to sell. So that is we call interbank call money market. Why this interbank call money market is important to us? We are customer. We need not to money. Sometimes you have a loan. So why this interbank call money market important to us? Because this interbank call money market interest rate affecting to our deposits and withdrawal rate. Suppose that commercial bank borrowed at a high rate. So ultimately this burden is shifting to the customer. So then our interest rate also in line with this interbank call money market interest rate is changing. So then you will ultimately your deposit or withdrawal rate is adjusting with the surplus of the deposit of the bank. So that is we call interbank call money market. So every day this is happening. This is very short term. Short term market. If you go to this central bank website again, right, you can read this. It is very interesting, right? As a habit, you go to this one and read these explanations. Financial system, interbank call money market. Read. So you can see standing facility, statutory reserve requirement, moral society. So if you need, you can read this in the singular. If you can't understand this thing. So it's explaining very elaborately, not like me. So therefore, please read. Simply, it's the interbank call money market is overnight market that mainly assess commercial bank in meeting their immediately liquidity requirement. This is overnight. So you can borrow from another bank or ultimately you have to borrow from the central bank. Interest rate applicable in the call money market is called the interbank call rate. So ultimately it is affecting to the withdrawing and the deposit interest rate of that particular bank with this interbank call money call rate. If you read the second paragraph, you can see orderly and stable functioning of the interbank call money market is important to maintain short-term interest rate and minimizing liquidity risk. This is a segment in the money market. So this influence short-term liquidity of the money market, right? Then treasury bill market. You know that one. Treasury bill market is a short-term market. This is government short-term fund requirement raised with the treasury bills. On behalf of the government, there is a particular department in the central bank. They are doing the auction for the treasury bill. If you are interested in the investing in the treasury bill, you can go to the primary dealer and you can invest. So normally in the treasury bills, you can see there is a face value. There is a face value. You may invest in at the discounted price. Suppose normally face value is 100. So normally it is trading at the discounted price. So you can invest at the discounted price. Suppose this is a 3-month treasury bill. So once it is matured, today you are investing at 95. At the maturity, you are getting face value. So the difference between this cost or the cost of investment and the maturity value is your rate of return. I will show you the statement received from the treasury bill investment to you to understand this. Actually, we are telling this is a short-term market like this. So this is a statement of the treasury bill investment. So who is the primary dealer here? Who is the primary dealer here? NSB Bank. So you can see this is the format of they are providing for the treasury bill investment. This is the borrower, customer. So see here the details. Face value is 5.3 million, 38,333. Date of sales, yield, you can see the rate per annum, 8.6. 8.6. Not this one. This is repurchase agreement. Look at this one. It is not there. I take some statement of the treasury bill investment. This is repurchase one. This is not the treasury bill investment. But anyway, let's see like this. Suppose you are invested, right? Suppose you are invested, say 5 million, 5 million in treasury bills, 1 year treasury bill. Your face value is, say, 6 million for the understand. So normally in their statement, they provide as the cost of investment. So this is your investment. So this is the face value. So this is suppose 1 year to understand the rate easily. Suppose this is a 1 year treasury bill investment. So what is the discounted price? You have invested, this is your cost of investment, 5 million. 5 million, 1 year treasury bill investment. The face value is 6 million. So normally I told you, normally when we are explaining the treasury bill, we say that face value is there, normally face value is 100, you are getting at the discounted price. At the maturity, you are getting the face value. So the difference between the discounted price and the face value is your rate of return. Right? So that is the treasury bills. So normally, suppose you are investing 5 million in the treasury bills, 1 year treasury bill. So now here, tell me the discounted price and the rate of return. 1 million. So then discounted price. So if you are invested 5 million, face value is 6 million. So then you can calculate the price, discounted price here. How? How? If the face value is now what is the implied interest rate here? Just calculate. You invested 5 million, that's you are getting 6 million at the maturity. So what is the implied interest rate? This is a discounted price. So then 600,000 is the 100. Then 5 million. If you invested 5 million, you are getting 100. So then how much the discounted price? Just to understand. This is the discounted price. You are investing at 5 million. So then in 100, this is how much? When you are getting 6 million, discounted price is 5 million. So if it is 100, what is the discounted price for one treasury bill? This is the face value. When you are getting 6 million at the maturity, you invested 5 million. So when you are getting 100, what is the value? Here is very simple. 80, 83. So that is the discounted price. So at that time, so this is the discounted price. 83 is the discounted price. At the maturity, you are getting 100. So how much the implied interest rate? Huh? That is the rate of return. That is the rate of return. So what I want to show you when you are practically investing, someone get investor and where treasury bill in the treasury bill investment, it should be more than 1 million at least cycle. If you are invested 5 million, this is the cost. This is the cost. මේක තමයි discounted price. At the maturity, suppose in the agreement it says you are getting 6 million. So මේක තමයි face value. So then using these two numbers, you can estimate what is the discounted value. Like this way, if it is 6 million, discounted price is 5 million. So then if it is 100 at the maturity, so what is the value? Discounted price. So it is around 83. So then implied interest rate you can calculate. That is the treasury bill rate of it. I haven't that document. I have a document to show you how this treasury bill statement is producing the customer. So it is saying that face value, cost of the investment, implied interest rate, and the discounted price. So that they are present in this information. So that is the way of calculating. So that is treasury bill market. So then commercial paper. What is the commercial paper? Commercial paper normally issued by who? Who is the issuer? Huh? Commercial papers are issued by who? PLC companies. Financial institutions also can, if it's a listed company, PLC companies can issue the commercial paper. What is the commercial paper? This is a money movement instrument. When a company is having some short-term liquidity issue, they can issue the commercial paper. Commercial paper also like this. There is the face value and the discounted price. Today, you are investing in the one commercial paper at this discounted price. At the maturity, you are getting the face value. So the difference between these prices, discounted price and the face value, is the rate of return. So commercial papers are issued by companies, corporations, well reputed, well matured, performing companies. So they have happened in Sri Lanka also commercial paper issues, but there. Then interbank foreign exchange market. That is also like the interbank call money market. In the foreign exchange market also, if there is any deficiencies at the end of the day, banks are exchanging currencies. That is same like the interbank call money market. So then when there is a dollar deficit in a particular bank, they are borrowing from another company that amount of dollar. And again in the next trading day, they are settling that one. So that is we call interbank foreign exchange market. This is also short-term overnight market. So this is affecting to the foreign exchange market liquidity. It is also a segment in the money market. So those are the segments in the money market in Sri Lanka. The money market is the market where the short-term instruments are traded, right? So then these short-term instruments we can categorize into four: interbank call money market, treasury bill market, commercial paper market, and interbank foreign exchange market. Right. Then capital market. So what is then capital market? Long-term financial instruments are traded. So you know what is the long-term? Maturity greater than 1 year. So these are the segments in the capital market of Sri Lanka. Long-term interest-bearing assets are traded. So you can see treasury bonds, private debt securities, bonds, debentures, equities. Main issue of capital market instrument: government, bank, private companies. So treasury bond market, equity market, commercial debenture, corporate debentures market are the main three segments in the capital market. Equity market, government treasury bond market, and corporate debenture market. The government treasury bonds, you know, issued by who? Government. Corporate debentures issued by who? Companies. Like the treasury bonds, when the corporation or when the company is issuing debentures, we call it corporate debentures or bond market or the debenture market. What is the difference between the bond and debenture? I think future also when we are doing that topic, I can explain. Normally we are sometimes we are telling bond market. Sometimes we refer to the debenture. Both terms are we are using interchangeably without any difference. Only difference is bond is a UK term Debenture is, no, bond is a US term, debenture is the UK usage. And also another difference is there. When a bond is issued, companies keep certain assets as the security. In case of the debentures, no any securities. That is the some other difference. Otherwise, same features, same characteristics, same process. Bonds and debentures. Right? Right. Primary and secondary market I explained. I'm not going to repeat it again. So this is you have to highlight season equity operate. What is it now? I explained. Primary issue is okay. I told you. So then what is the season equity operate? Yes, for the second time. Now Sampath Bank already PLC company. If they are issuing equity shares another again, so that is a season equity offer. In the primary market, in the government securities also, there is a primary market and secondary market. Now I'm asking from our banker, in the government securities, in this treasury bill investment, what is the primary market? What is the secondary market? You know what is primary market? Primary market is when the instruments is trading for the first time. Company का इस्तेमाल stock market में list करना पड़ा आपके कितना primary market. Primary में stock issue करना. So secondary market is after the initially invested, investors can trade the shares. That is secondary market. So in case of the bonds, government treasury bond, government instruments. What is the primary market? What is the secondary market? Primary market, in the treasury bonds also, there is a secondary market. Then treasury bonds are interesting. If I have a cash requirement, I can go to the secondary market and I can sell it. That is the secondary market. So what is the primary market and secondary market? Primary market, when the central bank issued the securities to the primary dealers. That is the primary market. And after that, primary dealers are issuing these to the investors. And also central bank directly sometimes issuing to the investors. So that is the secondary market. Sometimes in the large, not like me, අපි වගේ නෙමෙයි ලොකු ගණන් invest කරන අයට direct ගිහිල්ලා bid කරන්න පුළුවන්. Institutional investors are there, they can go to the auction directly. And they can bid, they can invest in the treasury bills directly through the central bank. So then, likewise, even the investors, they can bid with the central bank. So this is the secondary market. In the primary market, central bank issue the shares to the primary dealers. You can see this diagram also. So this is the second for primary market. After that, this primary dealers issuing shares to the banks, corporation, individual investors. So that is happening under the secondary market. So suppose now I have a treasury bill. So then if I need this, if I need to get the money for this, so then I'm going to the primary dealer. I sell the securities to the primary dealer and I get the cash. So that is secondary market. Already issued treasury bills. Right? So for the primary treasury bills also, you have to understand there is a primary market and the secondary market. I clear it. Then while stock market again unknown. Debentures might have some complication. In the treasury bills, like in the government securities also, when the central bank issued the treasury bills at the auction, that is the primary market. After that, primary dealers are issuing treasury bills to the individual investors, banks, financial institutions. That is secondary market. So they are trading between the primary dealers and the investors. Right? So this is the primary and secondary market related to the government treasury bills. Right. This is what? This is also money market instruments. repurchase agreement. What is it? Kaling ahapwen, aldi. Mega kaling repurchase agreement. Sri Lanka is there. Repurchase agreement is there with the treasury bills only. But if you go to the US-like country, repurchase agreements apply with the equity shares also. Other financial instruments also they are using for the repurchase agreement. But in Sri Lanka, we are using only the treasury bills. What is this repurchase agreement? What is the repurchase agreement? Buyers will purchase again. Yes, that is simply incorrect. Yes. In the future date, sell back them to the with that agreement. Yes, kind of thing. This is the repurchase agreement. Here you can see the investor is there, dealer is there. Normally, central bank they are declaring repurchase rate. If you go to the central bank website, the repo and reverse repo rates are displayed. If you go to this one, repo and reverse repo rate. Maybe treasury bill buy and bill. Somewhere it should be there. Anyway, normally daily they should show, so the banks should know what is the repo rate and the reverse repo rate. It's not there. Interest rate. One daily bank got a repo rate, take a reverse repo rate, commercial bank. Daily update. Population policy rate. Normally repo and reverse repo can but I couldn't find it here. But anyway, you can go to and see. So what is this? What is this instrument? Here, what is happening? This is a kind of agreement between the buyer and seller. You can see there is an agreement between the two parties, where one party sell the securities to another party with an agreement bind them or similar securities back in a fixed price and a specified date. So that is we call repurchase agreement. It is like a borrowing with some security. Now here you can see investor is there, dealer is there. Dealer means primary dealer. So then primary dealer sells securities. Securities mean here treasury bills. In Sri Lanka, we are using only the treasury bills. So then investor give money. It's like lending some money. Api primary dealers letter on behalf of the central bank. So we are giving some loan by taking this treasury bill as the security. So this is the borrower, is the lender. So then there is agreement between these two parties. This party agreed to buy these securities back in a future date at a fixed interest at a fixed price. So that is the repurchase agreement. Now I will show you the document. This is related to the repurchase agreement happening with the NHB bank. Look at this is the statement provided after the repurchase agreement. Now here, this is again the details of the customer and the borrower. See here, borrower. NHB bank is the primary dealer, he is the borrower. This is the lender, investor. So what is this? it is indicating again face value of the face value, date of sales, yield 8.6, date of maturity, days in maturity, cost of the investment. So this investor has provided 5.2 million on the repurchase agreement to this primary dealer with this security of the treasury bills. The may amount එකකට තිබ treasury bills වලට තමයි මේක agreement එක ක්‍රියාත්මක වෙන්නේ. So at the maturity, primary dealer providing 5.3 million. So the implied interest rate on this repurchase agreement is 8.6% per annum. So you can see this is the kind of repurchase agreement. Normally, when a repurchase agreement is signing with the customer, they have to use a security. So normally it is indicating here underlying the securities. May repurchase agreement එක අරගෙන තියෙන 6 million එයාලගේ treasury bill stock එක. ඒක තමයි මේ මේකෙන් indicate කරන්නේ practically. Right? So they have used this 6 million security amount එකක් security එකක් විදිහට තියලා තමයි මේ 5.2 million repurchase agreement එක active කරලා තියෙන්නේ. So kind of thing. So this is the way of presenting repurchase agreement. In Sri Lanka, repurchase agreement is happening only with the treasury bills. You can see we furnish below details of the repurchase agreement with us. This agreement. Right. Further read, right, to understand. So this is the repurchase agreement, and also there is a reverse repo. Nothing else. Reverse repo means when you look at this agreement from the investor's point of view, that is the reverse repo. When you look at this repurchase agreement from the other side, from the lender's point of view, that is we call reverse repo. Reverse repo කියලා දෙයක් නැහැ. Only the repurchase agreement. එතකොට repurchase agreement එක අපි opposite side එකේ බලනකොට ඒක is the reverse repo. When you view from the buyer's or the lender's point of view. So that is agreement which buyer makes with the seller securities to sell securities back in the fixed price. So what is the return here? As I show you that PDF, අර cost එකයි book value එක අතර තියෙන difference එක තමයි return. Right. Further reading is up to you. So these are the repo and the reverse repurchase. I think debt market, equity market, and the other thing, Colombo stock market. What is happening in the Colombo stock market? What is the main objective of the Colombo stock? How many listed companies are there in Sri Lanka? This is our equity market. We have only one equity market. If you go to India, US, London, how many equity markets are there? We have only one. Up to country. Yes, sir. Patrati. India here. That is Bombay Stock Exchange. Then nothing. What is happening there? What is happening? Everyone. Tell me. See that? What is happening in the stock market? How many listed companies are there? Search करना कि ताकि mana को माला because Google के search करना listed companies in Sri Lanka के how many listed companies are there today? And as of today, we said that they don't have financial endowment. Otherwise, no, they were very correct. I know that we now prefer to do the calculation, but they want to clear them. 284. 84. When I Google it, how did it get? 98, 292, 84 cannot do that. Oh, I will tell you this companies given. So you can go to the CSA.lk. This is our stock market. Listed companies. $84. Yes, 284. This is our stock market. What is happening in the stock market? Our ultimate objective in financial management is creating wealth, creating value for the shareholder. So what is happening in the stock market? It is exchanging security, trading securities of the listed companies. So that is the operating activity. So what is happening? It is the place where value is created. It is the place where the wealth is created for the shareholder. We know that. I think with the calculation in the last week, we can buy the shares today at 200 and when you say this same shares in the 300 in the next month. So that is the amount you created with wealth. That is your wealth. So that is happening with this stock market. This is the option market. So you can read again this website. You can read in Sinhala, Tamil, English, whatever. Right. So this is another mandatory reading. Central Bank website, csc.lk. This should be read. So what are the listed companies? What is the main index? What is the main index? So you can go to this one. Indices, all share price index is the main one. In addition to that, there is a standard and poor Sri Lanka 20. Now there is no Milanka. ये पार lecture එකේදී මිලංකා ගියා මිලංකා මේ suspend කරලා දැන් අවුරුදු 10කටත් එහා. No Milanka. Instead of the Milanka index, now it's the Standard and Poor's Sri Lanka 20. So these are the 20 blue chips companies performance. If you need to assess the best 20 companies, blue chip companies performance, you have to look at the behavior of this index. This is the all share price index. Normally, you know that in the every day after the news, it is saying that today all share price index increased by this much, decreased by this much. What is the meaning of that? When the all share price index increasing by the 5%, what it implies? Yes, on average, all the companies' prices are increasing in this particular day. So that is a good thing. That is a good thing for the economy. So it means that this is the economy. This is our economy. How many sectors are there in our market? Huh? How many sectors are there? There are sector indices. You can see sector indices. How many sectors are represented in our market? Around 20 sectors. Every day, daily, sector indices are calculated. Around 20 sectors. Now, GICS classification also there. Normally index, yes, around 620. So then, what is the difference between this total return index and the now all share price index? We calculate based on the total return as well as the price differences. When we look at this all share price index, this incorporate only the price changes, price moving. This all share price index, Standard and Poor 20, sector indices are calculating based on the total return also. Right? What is the meaning of that? Once we consider both price differences mean capital gains, capital loss, and also dividends. So that is the total return. That is, covered. Total return So total return means not only the price differences, not only the price deviations, dividends also incorporated to this index. All share price index indicate only the price movement. But when we look at the total return index for the all shares, this one, you can see daily shares trade is this total return indices. All share price index in the this is the overall this index calculator real time index or what is non-voting adjusted market capitalization. Yes, since within data specifically then total return negative all share price index calculate based on both dividends as well as share prices or the capital gains and capital loss. So this is our capital market. I am not going to explain this thing because we can't read this one this time during this time. So please go to this one. If you go to this one, you can say, and also there is some important information for the investor. Look at this one. You can create account also, you can download some information. And also if you go to the Security Exchange Commission, CAC, Facebook what sort of information. If you go to this Security Exchange Commission, this one also I think you can access with the single also. Here there is an investor folder. So many video clips, right, related to your knowledge in Sinhala and English and also under the publication, I think. Investor other publication. Under the publications, there are recordings. So many videos and the here. Look at this one. Lot of information. මොකක්ද කොටස් වෙනදව කියන්නේ තරත්පුර සමාගම මේවා පරිහරණය කරන්නේ කොහොමද? Lot of readings are there. Green bonds. There is a green bond roadmap. We are implementing that. So many lot of information are there. Actually, I am giving a quiz totally based on the financial market and things. You have to read everything. Central Bank website, stock market website, this one, Security Exchange Commission. Bus එකේ යනකොට කියුවේ හැකි. ඔයාලා බස් එකේ යනකොට FB වල ඉන්නේ. chat කරන්න. So you can hear, you can listen. Lot of recordings, very important. What is the wealth? මම දැක්ක මේකේ හොඳ ලස්සන එකක් තියෙනවා. I'm saying what is the wealth? Financial well-being. Is your money safe in hand? Be a wise investor. Know your documents. So wealth එකේ හොඳ document එකක් තිබ්බා. Please read. I can't find wise investor and maybe one. Please read. අච්චර දේවල් තියෙනවද කියවන්න. මෙහෙම තියෙනවද කියලා දැක්කද නෑනේ. ඒකනේ. ඔයාලා FB වලට මේ නාස්ති කරන data use කරන්න මේවට. මේ informative websites. මේවා daily updated. Now stock market website actually I also thought that 298 companies. Now it is 284. So this is updated daily. Right. So then capital market, equity market, please read these websites. Now we are going to infrastructure. Right. So what is the infrastructure? This financial system, what is the ultimate objective of financial system? What is the ultimate objective of financial system? What is the ultimate objective of financial system? I told you one term. Ultimate objective of financial system. Maximizing value. Value. What is the ultimate objective of a financial system? The theory. Yes. What is the term? No. Yes. Intermediation. That is the financial system for what? Financial intermediation. What is the financial intermediation? Moving funds from the surplus states to deficit. Where salary වැඩිතරවලට salary අඩුතරවලට යන්න system එක තමයි financial system එකේ තියෙන්නේ. So that is the financial system. So to do this intermediation smoothly, effectively, there should be a technology. We need to infrastructure. All the system, technology, everything related to this happening of the surplus fund transferring from the surplus unit to deficit period are the infrastructure. Now you know that there is a real-time cross settlement system. Real-time. That is all account is only part of real-time is updating. Over with the system. It is through the system. And also Lanka secure under the central bank. So that is controlling splittless equity settlement system. There is stock market again. Cultural transactions. No any hard copies. Splittless. Only the debiting and crediting system transaction. How many are investing? How many of you are invested in the stock market? Stock market accounts here. Series account here. Done. වැඩිනේ රුපියල් 5000ක් විතර කොටස් අරගෙන බලන්න පොඩ්ඩක් මාකට් එකේ සත පහක් තියෙනවා ස්ටොක් බ්‍රෝකර් කම්පැනි එකේ තියෙන ඇප්ලිකේෂන් එක කොහොමද දෙන්න විතරයි තියෙන්නේ so then you are getting the online trading facility so during the stock market opening time you can log into your account and you can see the happening and the changing of the prices so you may for the educational purpose just do now market is going up in the election announcement. Now it is going, I think, in the last yesterday, 1 point. Market out. Then you have positive. So you make it. Not that. You can go to any brokering company and you can fill the application. It is one account application. Do this. So, what is the technology used by the stock market? Central depository system, CDS account, CDS system. It is there. Central depository system. So, central depository system is a technology, is the platform control all the stock market transactions. Equity, treasury bills, debentures, right? එතකොට මේකත් ඉතින් අනේ මට කියලා දෙන්න බෑ. So this is all everything is explained. දැන් ඔයාලට තියෙනවා ඔයාලම top up කරනවා. Transfer කරනවා account එකේ account එක. Now each and every look at that market each and every market dot call. This is happening with this internet payment system. දැන් ඉස්සර check එකක් ආපුවම හවසට bicycle එකක් අරගෙන check එක අරගෙන යනවා නේ බැංකුවට. එහෙමනේ check clear කරගත්තේ. Now hey, available check එක registered. So that is happening with the payment. What is this electronic fund transfer switch? Within the bank, you can transfer the funds. Done. You are in the commercial bank. Commercial bank එක තමයි leading bank with the technology. නේ මෙයා කොහෙද work කරන්නේ? Head office ද? මොන section එකේද ඉන්නේ? Accounts. යන්න treasury එකට එහෙම යන්න. එතකොට තමයි මේවා ගැන තොරතුරු update වෙන්නේ. Even we are not even myself I don't know everything. But anyway, you have sources. If you go to this one, again if you go to the central bank website, You go to this one. Financial system. Look at here. Financial infrastructure. Everything is explaining here. You can access in whatever prefer language. Everything is there. Please read. What is the මේක සිංහල දැක්කම මට නම් නිකන් එක පිස්සු වගේ words වලට, but anyway better to read in the English. So you can read everything. Payment and settlement system. Payment systematically important payment system. You can real-time gross settlement system, Lanka secure, retail payment system, check imaging and truncation system, interbank payment system, US dollar check clearing system, interbank US dollar, common electronic platform, SIT, and also QR. Very recently, it is very popular. Other payment settlement system, common ATM switch, shared ATM switch, Lanka QR. Now this is very famous. Lanka QR is a payment settlement system. Right? You may read. Right. So these are the regulatory authorities. I think you know: Insurance Bank, Insurance Board of Sri Lanka, Security Exchange Commission, Central Bank of Sri Lanka. They are the in the financial system. One element is the regulatory authority. So you can see who are the regulatory authorities. Basically, CBSL, SEC, Ministry of Finance, even the regulatory authority, Insurance, Sri Lanka Board of Insurance, Insurance Board of Sri Lanka. They are the regulatory authority. So this is stock market. So you may read this thing. Now, why this financial system is important to the business finance student? You remember that diagram in the first day, last week I show you role of finance manager. Do you remember that one? So I told you without knowing this one. This is the role of finance manager. Investment decision, financing decision, dividend decision. So you know that. So this is the financial market where all these things are happening in this market. So in order to make the fundraising, fund investment, reinvestment, all these things are doing effectively. So financial manager should have a good knowledge, good understanding about the financial market. So without knowing this thing, just think about, can you run the business? Can you do the investment analysis? Can you finance? No. You should know what is happening in the market. What is the interest rate? What is the repo rate? What is the treasury bill rate? Innovations, everything should know. So that is why this is very important. So sound knowledge is required to perform this role effectively. So that is why this topic is very important as a business finance learning student. And also this is affecting to our organization. Look at here. This is the financial system, financial intermediation. So there is a business organization, right? So this is financial intermediaries and financial infrastructure, financial system, market, instruments, everything is there. Financial market. So this is where business, when you are running the business, you need some fund. You have to issue shares, you have to issue debentures, you have to do the deposit, you have to invest that money. So this is happening in the market. We call this is indirect flow or indirect flow. If you directly raise funds from the financial market, we call it direct financing. The diagram financing parts දෙකක් පෙන්නනවා. This slide, if you look at this one, this is direct financing. Because business organization directly raise funds from the financial market. So that is we call direct financing. So through the intermediaries, if you are going through the intermediaries, that is we call indirect financing. Right? When you are taking the bank loan, it is from a bank directly, so that is a direct financing. But mostly business organization go through financial intermediaries. So the indirect financing is mostly happening. But indirect direct flow also there are some textbooks it says that primary issue as the direct financing because cash flow directly coming to the company. So it is identified as a direct financing activity. But anyway, investment banker involved. So intermediaries coming through the process. So therefore, again, it is become the indirect finance. Right. Anyway, this is the importance of the financial system, financial market, instruments to the business to achieve our objective. Right. So last point is the global financial environment. Your presentation, එක group එකකට Sri Lanka financial system එක. So other groups are based on this global financial environment. What is the global financial environment? It is refers to the international network. Now here, this is domestic in our Sri Lanka. This is refers to the international network financial system, market, institution that facilitate the exchange of capital, goods, services across the borders. That is the global financial market, not within the country, but across the borders. So just think about who are the players in the global financial environment. So these are some elements introduced to the global financial activities. Global financial market, international monetary system, global economic policies, international trade and investment, financial institution, economic integration, risk factors. Like you know that geometrical activities, geopolitical things. Now there is a war in the Russia. So that is happening to Sri Lanka, that is impacting to the Sri Lanka also. another issue එකක් තියෙනවානේ දැන් අර කොහෙද බංගලාදේශ. So we are impacting. So this is the geopolitical risk happening in the global financial environment. Right? මේවා මේ උගන්වන්න දෙයක් නැහැ. This is you have to read and understand. So these are the some elements. Global financial market, bond market, foreign exchange market, international stock market. අපි ගත්තොත් New York Stock Exchange එකේ international market එක. Right? So these are affecting to the global financial environment. International monetary system. This is control the exchange rate regime through the international monetary system. Floating the fixed exchange rate control international monetary system. And also the global economic policies. Governments, central banks around the world. So they are influencing to the global interest rate, inflation rate, economic growth. You may read. International trade and investment. Trade agreements. You know, a lot of agreements are there. Business studies a lot of agreements. Financial institution. Monetary fund, IMF. Last resort. Then Chanda right? So International Monetary Fund, World Bank, World Health Organization. These are the international institutions, financial institutions. They are affected to the financial environment. Economic integration, organizations and integrations such as European Union, NAFTA, more than that. These factors with the geopolitical environment, interest rate fluctuation, economic downturns, please read. So these are the important websites. I think it is there in your slide. So these are in news and the updating website. You may go to these links and see what is happening in the global financial environment. Right. Some journals. These are also linked. Financial Times, Wall Street Journal, Bloomberg, Economics. That's all. That's all. Head of financial environment, financial market, you have to read. Thank you. But that was very wrong. Now, we are going to find value. I will break next. I will make up. Then I will officially finance, business finance, financial is the type of. Any question on the introduction on this? Any clarification? මේක සාගරයක් වගේ ඒරියා එකක් මම මේ කිව්වේ. ඒරියා එකක් ගත්තම සාගරයකට තියා. So you have to be. අර මේ හැමදේම කියලා දෙන්න බෑ. I am doing one is a framework. ඊටත් දෙකක් තියෙනවා. දැන් මේකේ මම ඔය මේ වගේ කතාවක් කරන බ්ලොක් චේන් මේ මැෂින් ලර්නින්ග් මොනවාද AI related things කොච්චර දේවල් තියෙනවද? ඒ වගේ දැන් මේ ටොපික්ස් එනවා මේ ප්‍රසන්ටේෂන් එකට. මේ වගේ ටොපික්ස් එක තමයි ප්‍රසන්ටේෂන් එකයි කිසිම මන් දෙන්නේ. ඒවා වල රීඩ් කරනවා. ඕනතරම් තියෙන ඔසෝසර් දැන් මේ මොකද ආටිෆිෂල් ඉන්ටෙලිජන්ස් එක ඕන දෙයක් වලට හොයාගන්න රටේ වල රීඩ් කරනවා. You have to understand. මොකද මම ක්වෙස්චන් කරනවා ඒක ඔයාලට පුළුවන් මෙතන මේක කැට්ස් ඔෆ් කරලා මේක ලර්න් කරලා ප්‍රසන්ට් කරන්න. එහෙම නැත්නම් මේක හරියට ප්‍රසන්ට් කරන්න බෑ. So you have to learn, you have to get them into your mind and you have to realize it. Right? Okay, so then let's have again 20 minutes break. So then until 6:30, right? It's around 6:30. I'm going to rest in there. Break it down. Then right. You can resolve your issue also. Otherwise, you can sign like done with previous session. Did you reserve the shoe?
අප්ඩේට් කරලා
එන වලදී ලස්සන කරේ ශිරන්නේ.
හතර දෙනෙක් ඉන්නකෝ ඒගොල්ලන්ට අසන්න එපා කියන්නේ අර සෙමිස්ටර් එකේ රෙජිස්ට්‍රේෂන් ෆෝම් එක සබ්මිට් කරනකොට හතර දෙනෙක් ඉන්නකෝ ඒගොල්ලන්ට ටික අසන්න කරන්න එපා.
ඔය පේන තැනක ඉඳලා ලස්සන කරන්න.
ඒ ෂීට් එකකින් එකක් තියෙනවා.
ටයිම් දෙකක් දාලා තියෙනවා. මම එකයි ක්ලාස් එක. 12 to 13. ඔව් එන ළමයි දෙකේ මසල් කරනවා. Ngay nó có bao giờ về đất này mình có bao giờ để cái này nữa đây research thế đây
නෑ මේ තාම සෙකන්ඩ් ඉයර් මේ සෙකන්ඩ් ඉයර් සෙකන්ඩ් සෙම ඊළඟ මාසෙ ඉස්සර
exact
මේ මොකක්ද මේ සබ්ජෙක්ට් එක ෆයිනෑන්ෂල්
it's a finance there were like what subject matters my accounting subject is really
ඒක ඇඩ්වාන්ස් මැනේජ්මන්ට් අකවුන්ටින් කියන එක ෆයිනෑන්ස් එකක් කියනවා ඊළඟ සෙම් එකේ තියෙනවා
investment portfolio yeah අපි මිස් කරලා කරනවා ඒක ඉලෙක්ටිව් එකක් නේද
ඒ කියන්නේ අපිට third fourth year එකේ නම් electives එන්නේ third year එකේ මේ කම්පල්සරි ටික තියෙන්නේ මේ fourth year එකේ නම්
මොඩලින් උත් තියෙනවා නේද
ඔව් financial modeling financial modeling, forensic accounting. මේ
investment.
මේක ස්පෙෂලායිසේෂන් 3-4ක්.
ඒ අමාරුනේ.
ඕනනේ ප්‍රශ්න නැහැ.
SLC එකක් විතර වල කරනවා. That's the
මම
first
වෙලාවට මම දැන් ළඟදී තමයි join වෙන්නේ සම්පත් බැංක්
That's something.
main branch. ඔඩිට් එකේ තමයි ඉන්නේ මාර වෙන ඉන්නවා ප්‍රෙසෙටි එකට.
Internship එක ගන්න නේ.
දැන් training permanent තමයි.
හොඳයි. ඒතර කොහොමද එකක් තියෙන්නේ? ඉන්ටර්වියු සම්බන්ධ එක්සෑම් එකක් තියෙනවා.
exam interview තුනක් තිබ්බා.
sure. අන්නේ ඒක සම්පූර්ණ නරක නැහැ.
මට මේකට යන්න කැමතියි. මට finance එකේ treasury ඒ පැත්තේ
ඔව්. ඒවට chance එක ගන්න පුළුවන් මේවා.
ඒකත් එක්ක personal institute වලදී මම දැන් CFA කරන්න කියලා ඉන්නේ.
ඒක ඉවර කරලා පටන් ගන්න.
අවුරුදු 3-4ක් පොඩි
මේක කරපුවාම ඔයාලට නෑ ඒක ඉන්පුට් දන්නේ නැහැ.
අවුරුදු 3-4කට පස්සේ වගේ මේ සල්ලි මේ පොඩක් කොලෙජ් එකත් මේක අරගෙන කරන්න කියලා.
හැබැයි වැඩි තියෙන්නේ ඔයා බැංක් එකක නම් එස්ටැබ්ලිෂ්මන්ට් යන්නේ ඔයාලට මේ බැංකින් එක්සෑම්ස් කරන්නත් වෙන්නේ.
මම ඒක ඩිග්‍රී කරලා මම මේක ඔය පොඩි එක්සෑම්ස් මේ බැංකින් එච්චර මේක කියන මම ඒක කරලා මේ ට්‍රෙෂරි හරි වගේ හරි ඉල්ලලා මම ඒකේ ඉන්න නොලෙජ් විතර ට්‍රෙෂරි එකේ තියෙන නොලෙජ්
ඒක පොත නොලෙජ් එක
තියෙනවා. ඒකට ඒ නොලෙජ් එකේ තියෙන පොලිසි
චාර්ට් කරනවා.
නෑ චාර්ට් කරනවා. මම සීමා හරි මොන හරි කරන්න කියලා ඉන්නේ.
සීමායි CFA දෙකම නම් ඕනේ දැන් සීමා ඕනේ මේ ඩිග්‍රී එකක් තියෙනවා. CFA පොතයි ටිකක් අර පොස්ට් එක තමයි. සහාය තින් ටිකක් ප්‍රිපෙයාර්
ඒකට සීමා ඕම් නෑ නේ. මේ ඩිග්‍රී කරලා මේ
CFA qualification එක කොහොමද?
වෙන මොකුත්
අමාරු ඉතින් කරගන්න.
අමාරු ඒක පොඩ්ඩක් අවුරුදු 3-4ක් ඉඳලා මේ ෆුල් ඒකටම ફોකස් එක දීලා කරනවා.
හොඳයි. මොකද ඉතින් උඩට යන්නත් පුළුවන් අනික එතකොට බැංක් එකේ ගිහින් බැංක් එක්සෑම්ස් ටිකක් කරලා CFA වයි කරලා දිනනවා කියන්නේ ඉතින් හොඳයි.
අවුලක් නෑනේ මිස් බැංක් එකට CFA ප්‍රශ්නේ
නෑ චීප් ෆයිනෑන්ස් මේ චාර්ට් ෆයිනෑන්ෂල් ඇනලිස්ට් පැත්තේ යන්නේ. ඒක ප්‍රශ්නයක් නෑ. කෝපරේට් ෆයිනෑන්ස් පැත්තට ටිකක් බරයි. නමුත් ඉතින් බැංක් එකේ පුරා ඒක ප්‍රශ්නයක් නෑ.
ඒක මට ස්විච් වෙන්න පුළුවන් මිස් මේ මොකක්ද එකකින් ඉන්න මේකට
පුළුවන්. ඒක ස්ටැබ්ලිෂ් වුණාට පස්සේ ඕක මූව් වෙන්න පුළුවන්. ටාගට්ස් හොඳයි. ඒක good luck. සල්ලි ආගන්න ඕන ඉතින් ඒක තමයි ලස්සන.
මේකයි මම බැංක් එකට ජොයින් වුණේ පොඩ්ඩක් මම ෆීස් කියවන්නෙත් මම මිස් ඒකයි මේ නැත්තම් ඔඩිට් ෆර්ම් එකේ හිටියේ එතන මේ මට ෆොරෙන්සික් ඇකවුන්ටින් කතා කරේ EY එකේ. එතන මේ 15යි දෙන්න කිව්වේ අලවන්ස් එක මට ඒකේ ෆීස් එහෙම ගෙවන්න බෑ. මේකයි මේ මම බැංක් එකට ජොයින් වෙලා මම ඒකේ පොඩ්ඩක් ගෙවන්න
සැටර්ඩේස් වැඩ නැද්ද?
සැටර්ඩේ සන්ඩේ වැඩට. ඒකත් එක්ක මේ මම ඒකෙන් තමයි මගේ ෆීස් එක දැන් ගෙවන්නේ ඩිග්‍රී එකක් මේ. ඒකේ වල එකකින්ම
සාමාන්‍ය වර්කින් යකට හම්බෙන්නේ.
මට බේසික් ෆස්ට් ඉයර් 50 දෙනවා 50 දෙනවා කිව්ව සෙකන්ඩ් ඉයර් 60 දෙනවා ඊට පස්සේ කොහොමද එක වගේ ගන්න
ඊපස්සේ ෆැසිලිටිස් නම් මම හම්බෙනවා.
මොන ෆැසිලිටිස් ඒව තියෙනවා ඒකත් එක්ක මට ඒක තිබුණ බැංක් එකේ ඉඳලා කරගන්න.
ඔයාලට කන්සෙෂන් රේට් ලොවන්ස් එක ගන්න බලන්න. ටිකට් පොතක් අරගෙන දැන් එන්නේ. හා? කොහොමද ඉතින්? ඒක හොඳයි ඉතින් දැක්කම කතා කරලා කොච්චර ආසයිද?
නෑ මම දැන් හම්බෙන්නේ කියලා ඉතින් දකින්න නෑ මේ හම්බුනේ නෑ මේ
මම මේ ළඟදී කට මේ ගිසති පටන් ගත්තා. කොහොමද වැඩ කරන්නේ?
One day a week.
LOLC.
Deloitte එකේ.
Deloitte. Deloitte. Training ද permanent? Training.
මම ඉස්ට කෝල් කරා සාංශ දෙවියන්නා මෙයාට කතා කරාම ඉනම් වෙකිල්ලගෙන
කතා කරා? කොයි කාලේ?
දැන් නම් ගොඩක් දුරට දැන්
මෙහෙම මැසේජ් එකක් දාන්න ඕනේ. සමහර කෝල්ස් ගොඩාක් එනවා. ඔයාලගේ නම්බර් සේව් කරලත් නැහැ. නමුත් ඔයාලා මැසේජ් එකක් දැම්මොත් මම දන්නවනේ ඔයාලගේ ඒකට මම කෝල් එකක් ගන්නවා අනිවාර්යයෙන්. ඉස්සෙල්ද
මම එදාම රිට්‍රයිව්
මම ඒක ඇක්සෙප්ට් කරේ නැද්ද?
ඔව් කරා.
ඔය ඇක්සෙප්ට් කරා. මට ඒක
ඒක එච්චර ප්‍රශ්නයක් නෑ මට. ඒ නිසා මේ
මැසේජ් එකක් දාන්න. තමයි මේ කෝල් එක වහන්න බෑ. එහෙම මේ මම මෙහෙම ටැප් එකේ කියලා දාපුවහම දන්නවා කවුරු හරි. ඒ කොයිද වෙන මූව් වෙන්න බලන්න. ඒ මෙතන සබ්ජෙක්ට් කීයක් යනවා මෙසෙන්ස් එකේ තුනයි.
පහක් මේකේ පහක්
ඉගෙනගන්න එක අහක යන්නේ නැහැ ඉතින්. මේකත් හොඳ ඩිග්‍රී කරන්න ඉතින්. හොඳ එක්ස්පෝෂර් එකක් හම්බ වෙනවා හැබැයි. දැන් මොකද රිපීට් එහෙම නැහැ. කොහොමද කරන්නේ? කොහොමද බිස්නස් ෆයිනෑන්ස් වල මම එහෙම කරේ ඉන්ඩිවිජුවල් ලකුණු දන්නේ නැහැ.
ඒ
ඒ. බයිකෝ. මතකත් නැහැ. ඒ කියන්නේ ඒ තරම් හොඳ රිසල්ට් එකක් තිබිලා තියෙනවා. A plus උත් යනවද වලට?
A plus උත්
A plus A minus
A minus B plus B minus.
ඔකොත් ස්කේල් එක යනවානේ. ෆේල් වෙන්නේ C එක තියාගන්න පුළුවන් සෙමිස්ටර් එක.
C එක ඔව් C එක ප්‍රශ්නයක් C එකට පල්ලෙහෙන් තමයි
ෆේල්. කෙනෙක් දෙන්නගේ ඉෂුස් වගේක් තිබ්බා මම දන්නේ එළ මොනවාද බෝඩ් වලින් සෝට් වුණාද කියලා. කොට දාන්න උඩරිම කොට දාලා. හරිම කෙනෙක් දෙන්නෙක් හිටියා ඔයාලගේ අනිත් ගෲප් එකේද කියලා මතකද නැහැ. ඈ? තිබ්බද? ඒත් මෙයාට කිව්වා ජෙනිපට මට කොට දාන්න බෑ කියලා.
මටත් අමාරුයි මම අන්තිම සති දෙක තුනක තියාගෙන රැය ඉඳගෙන පාඩම් කරා මම පය වුණා ෆයිනල්ස් ෆේල් එකේ නෑ කියලා. දැන් ඒකෙන් තමයි ඉන්ට්‍රස්ට් එක ආවේ මේක හරිම මේ ෆන් කියලා ඊට පස්සේ තමයි කරමු කියලා.
ක්ලාස් එකේ වැඩ කරපුවා නෙමෙයි ක්ලාස් එකේ මට පුළුවන් තරම් ඩිස්ටර්බ් කරපුවා. හොඳයි. දැන් අජොට් සර් ඉත කාලේ.
දැන් ඊළඟට
ඔඩිට් මොකක් හරි එකක් කියන්නේ ඔඩිට් ඇෂුරන්ස් කියන්නේ.
ඔඩිට් ඇඩ්වාන්ස් ඔඩිට් එකයි ඇඩ්වාන්ස් ඔඩිට් එකයි ඇඩ්වාන්ස් මැනේජ්මන්ට් අකවුන්ටිං
අජොට් සර් නේ කරන්නේ.
ඔඩිටර් කරන්නේ ශ්‍රීලංක සර්. දේශාංශ
හොඳයි සතුටුයි ඉතින් කතා කරන්නේ. දැක්ක තැන කතා කරන්නේ බැංකුවකට ඉමවිලා පොලිමේ ඉන්නකොට. ඒ දැන් පොලිමේ ඉන්නකොට ඉතින් අහක බලාගෙන ඉඳිත් දන්නේ නැහැ.
ආස්තිකී කියනනම් හරිනේ. එතකොට මොනවයි කරනවා ඩිපාර්ට්මන්ට් එකේ.
දැක්කහම ඉතින් කතා කරන එක ලොකු සතුටක්. ඒක තමයි අපිට තියෙන එකම සතුට. ඉතින් අපි ඇත්තටම ඉතින් සමහර තැන් වලට ගිහම අපි ඉතින් නොදන්න විදිහට හෙල්ප් එකක් එනවා. ඒ කියන්නේ ළමයි ස්ප්‍රෙඩ් අවුට් වෙනවනේ ඉතින් හැමතැනම. අපි දන්නේ නැහැ. දැන් ඔයාලා අපිව දන්න වුණාට දැන් සමහර විට වාව මට මතක් නැති වෙයි. ඔව් ඒකයි. හරි. ඔයා මේ බෝඩ් එකලා ඉන්නේ
නෑ විස්කම් පානදුරේ තමයි.
අර අනිත් තුන් දෙනානේ බෝඩ් එක එක දවසක් කර දාන්න.
ඒ දුන් දින විශ්ද එක්කලා මේ
ඔව්
ඒක නැවත කතා කරමු.
දැකලා කිව්වේ නම් නන්දදාන මිස්ටර්
කතා කරමු.
කතා කරන්නේ
තුන් දෙනා ගොඩ ගියා නේද?
ඔව් මම හිතන්නේ මේ BA
ඒමේ තියෙනවා.
හොඳයි ඉතින් සතුටුයි. හොඳයි good luck all the best. හරි. So we can start now. Topic time value of money. It's like a heart of finance. So you can see most of the discussion in future are based on this concept value. That is our objective value maximization. So we should know what is how to determine the value to maximize first. So let's look at the learning objectives. At the end of this, not probably today, you will learn the concept of time value of money. And also you will identify the process of compounding and the discounting. So when different cash flows are receiving in the different time periods, you have to take, in order to take the decision, you have to make them equivalent. Otherwise, you can't take decision. So through this discounting and the compounding process, you can do this one. So you will learn these two processes and also related to the different types of cash flows, single cash flow, multiple cash flows, annuities. So you will learn how to determine present value and also the future value. So then certain applications, because this is the concept of time value of money. So future you are applying this one for the security valuation, in capital budgeting, so likewise we are using this one in a lot of decision making. So certain other applications related to the loan amortization, scheduled bank installment calculations. So likewise, we are using this one to the certain application. So these are the intended learning outcomes. At the end of this session, you should learn these aspects. Right. So you can see here, suppose you have 1 million to invest for 1 year. So you are considering following options. 1 year fixed deposit at the rate of 12%, government treasury bill, 3 months, 8.6%, and in the Colombo stock market, you expected annual return 15%. So likewise, you are given certain alternatives so that you can invest. Right? So here, NSP fixed deposit for the 1 year. So your rate of return is 12%. So in the maturity, you will get 1,120,000. So if you invested in the government treasury bills, actually this is for the 3 months, 3 months treasury bill. Your rate of return is 8.6%. At the end of the 3 months, you will get 1,21,500. And if you go to the stock market investment, your expected annual rate of return is 15%. So at the end of 1 year, you will get 1,150,000. Here actually, what is I'm asking, these are 3 alternatives. You have 1 million for investment short term. Short term means 1 year. So you are providing 3 alternatives. So if I ask which one you are going to select, it's some rational. Can you say? I have given particular rate of return for this particular investment. 3 possible alternatives are provided. So what you are going to say? Which are the person with this 1 million? Which one you will select? Colombo stock market. What is the reason? Returns more. Returns more implies high risk. So you are a risk taker. That is the thing. You are a risk taker. You are like to invest in the stock market. with a 15% rate of return. If you go to this top NSB, fixed deposit, you will get 12%. Probably it is because NSB bank will not bankrupt in the 1 year. It's an established bank. So therefore 12% you will get for sure. But anyway, you are going this one because you are saying that 15% is higher return than this one. So like that. Yes, you are Nishita? Huh? You say? I will give you part. That's why you are going. Gira Kundari people. The Gira Kundari Dikai, Tuna. Yes, some kind of Kundari, like they have a silver in Nixina, one, but we were there. Gira Kundari, they did not, then it is a matter of Kiro, then I think of Kiro, they were Gira. So you also said the same. Don't it? What is the reason? Annual rate of return is high. Yes, speed was it last. What is your choice? Huh? NSB. Why? What is the reason?
Absolutely. The high significant again is one.
So that is the reason. So you are going with NSB. Any other different thoughts? Now here this government treasury bill, PB investment, 3 months. So how this 1,021,500 is calculated? Can you check this? You invested 1 million. How this answer is come? 1 million for 3 months. So normally rate of return is provided per annum. So that is the practice. Financial institution, bank, central bank normally provide rate of return. The rate of return per annum. However, they so 8.6%, not for 3 months, per annum. Right? So the per annum means, so you are getting 0.86 now. So then from this for 3 months, 12 divided by 3. This is the answer. So this is for the 3 months. 3 months treasury bills. So that is your realized value at the end of 3 months, 1,021,500. Next day when you are coming, should have a calculator, right? I think if you have that quite impossible. Scientific calculator, so you have to take that one. Otherwise, you're not able to take this difference. We can form. I taking this number. Yeah. 8.6% per annum for the 3 months. So you have to take the interest for the 3 months. So this is rate of return provided here for the 3 months. The NSB one for 1 year. Expected rate of return for the stock market also for 1 year. So I'm asking these three alternatives, which one you are going to select? Can you compare this treasury bill investment, this value, terminal value, with this and the NSB one? Cannot. What is the reason? Different time. This is you are getting within 3 months investment. There is a reinvestment opportunity. After 3 months, once you get this invested value, so you can reinvest for another 9 months. This return. But here this is for 1 year. This one also for 1 year. So likewise, you can see these 3 alternatives. You cannot compare. So I asked you which you are going to select. You cannot do that. In order to compare these 3 months one, you have to annualize. Then you can compare because there is a time differences. And also if I ask like this, if I ask like this, suppose your friend owes you to 10,000 rupees. Indicate your preference considering that your cost of capital is 12%. So I am giving you a cost of capital today, or cost of fund, or opportunity cost of capital, or your required rate of return is 12%, is provided. Having 10,000 just now, again the option, having 10,083 in 1 month, having 11,000 in 1 month. What is your choice? You have a 10,000 rupees to be get from your friend, right? So what is you prefer? Get this 10,000 just now, or in 1 month, 10,083, or in 1 month, 11,000. Yes. Your decision. 11,000. Why? Because this 11,000 is higher than all other two. Right. So answer to our investigator going for time value greater than first. Right. Any other? Just now. Why?
Capital rate of capital is 12%. I think how 1,200 per month. It is better to take now rather than taking half one now.
Are you getting 1,200 per month? Normally, rate of returns are provided per annum. So this is your cost of fund. This is your required rate of return. How do I get this fund? By looking at the coin market interest rate. By looking at the central bank website. So this is the proxy. And I'm done what is the cost of fund here. The balance of fixed deposit there, then what rate of return. So that is the appropriate or approximate proxy for my cost of fund. The rate of return is around 12%. This is normally per annum. 12% not per month. Normally, මතක තියාගන්න හැම වෙලේම rate of return එකක් දෙන්නේ අපි discount එක කතා කරලා we discuss that one again per annum. ඒක දීලා තියෙනවා 12% per annum. So are you getting 10,200 per month? No. 100. So then your decision getting 10,000. No. Getting 11,000. Why? Your cost of fund is 12%. If you calculate your equivalent value in 1 month, now your cost of fund is 12%. So then per month is 1%, 12% per annum. So nominal cost of fund per month is 1%. So then per month you are getting 100. So at the end of the 1 month, you should have 10,000 plus this no. This is the equivalent value. Equivalent value. Either 10,000 today, or 10,100 in 1 month, equivalent. You are in the different situation. But because these are equivalent at your cost of fund. Right? So these are equivalent. So therefore you can compare this one and this one. Right? So the concept I want to explain you. Suppose here, if I given you, if I given you this 11,100, your answer is correct because you are in the equivalent situation. Either 10,000 getting today or in 1 month 10,100, you are indifferent because if you have 10,000 today, you can invest this 10,000 for 1 month at 12% and you can get this one. These are equal. But here, 10,083 is less than this one. So therefore, you may not accept that one. It is not aligned with your cost of fund. So having 11,000 means it is more than your expectation. Right? I'm going to make a mistake with that. It should be this one. 11,100. So then you can compare this 11,100 and 10,000 because these are equivalent. But if you take this 10,083, it's not your expected amount. So therefore, you are not accepting that. Right. So then as a concept, what I am going to give you, the cash flows receiving in the different time periods, you cannot compare. As an investor, you have to compare in order to take the decision. Today you are investing. You are expecting some return in some future date. So in order to decide whether you invest or not today, you should be able to value this. Then you can compare this value with other alternatives to decide whether you accept or not that particular investment. In the security valuation, we are going to do this. We value the bonds, preference shares, equity shares to take the decision. See whether they are undervalued or overvalued. Right. So as a concept, now you can see, in order to make compare, their value should be equivalent platform or the equivalent level. Right. So this is the core in this topic, time value of money. As a human being, normally money receiving today is more valuable than money receiving today. In the previous case also, you prefer to have 10,000 early. If you have this 10,000 early, you can invest it at 12% and you can earn some interest. So the time value of money as a concept, what is the meaning of that? In simple, money receiving today more valuable than money receiving tomorrow. That මම වලට ණයක් තියනවා කියනවා. ඒතර මම කියනවා මේ මම අපිට සතිය දෙන්න. ඒතර ඔයා ඒකට කැමති නැහැ. You want to have that fund period. මම කිව්වා මම හිතන රුපියල් 1000 දෙන්න තියෙන්නේ. මම කියනවා 1000ට මම අපිට සතිය 1100ක් දෙන්න. Then you have to analyze. You have to analyze because I have provided extra money for your time value. Right? Some extra 100 rupees for your time value. So then you have to analyze whether it's 1,100 and this 1,000 today, whether they are equivalent. If they are equivalent now, you are in the dilemma. Either getting 1,000 today or the 1,100 next week. Okay. Because they are equivalent. So that is what we are going to do in this lesson. Why the money has time value of money? Why you prefer to have money early? What is the reason? Because of this reason. Time preference for money. Because individual preference for the early consumption. Today, you have no any diabetes, pressure, sugar, no any disease. You can eat hot food, chocolate, whatever you feel. Early consumption. Now I can't eat sugar, sweet. Even though I prefer chocolate, I have to leave it. But now you can eat. So that is the reason, one reason, early consumption. Because if you have money, you can use it for the consumption as an advocate from entrepreneur. So that is the consumption. So you can use this money for the consumption. That is one reason. right? Consumption, preference for the consumption. But once you 10 years back, 10 years after today, you might not. You have blood pressure, you have sugar, so you can't do it as you wish. So that is one reason. And the other thing is the ordinary use of money. If you have money today, what's up there? Salary here, yeah, we not prepare. What about say field balance? So what about it is you have? You can invest. That is also another alternative. It is another reason. Alternative uses of money. There are a lot of alternatives if you have money today. So therefore, as a human being, you prefer to have money early. एक आप यार बहुत आर्गुमेंट मुझे gather करो एक gather करो भी मेरे घर ये देखा time value of money we prefer to have money early because of this reason consumption requirement already uses of money and the other thing is risk. Yes, when you are waiting next week until you get the 1,000, my life is not that. There is a risk. There is uncertainty. So that is the risk. So you are not like to take that risk. So therefore you prefer to have money just now, then. I need this then. So that is reason. Risk, alternative uses of money, and also individual consumption patterns. And the other thing is inflation. However, this inflation also one reason. Inflation is coming with the consumption and also the risk factor also inflation adjusted. Inflation in some textbooks, inflation also identified as a separate factor. But anyway, I will show you with this formula. Inflation we are adjusting with the time value. Anyway, you can take the inflation also as a factor. Reason for the time value of money. So that this preference is based on the time value of money. So for your exam, if I ask the question, what are the reasons for the time value of money? You should be able to explain this thing. I think in your LMS, I have uploaded the chapter. I think it is there. Already good right? For the exam, if you go to this one, anyway, I have no the PDF no in my pen, but I have uploaded that chapter, time value of money. So please read. All these reasons are explaining elaborately. I think it is there in the LMS. Time value of money chapter. So these factors I just explained, but anyway, these at least that sections you have to read. Why? What are the reasons for the time value of money? So because of this reason, people are prefer to have money today than tomorrow. So that is the time value of money. Money receiving today is more valuable than money receiving tomorrow. Normally, your required rate of return, as I mentioned earlier also, your required rate of return consists with the two factors, risk-free rate of return plus risk-free rate. Your required rate of return, in the previous example, I gave you, it is as a 12%. So this 12% consists with risk-free rate of return and the risk-free. This risk-free rate of return again divided into two. Real rate of return, you know what is real rate of return without inflation, without including the inflation, and expected inflation. Expected inflation. So you can see here this required rate of return is equal compensation for foregoing consumption, current consumption, and rate of inflation plus for the risk. Because risk-free rate of return is includes real rate of return plus expected inflation. So this is for the consumption. Forward consumption, this is for the inflation adjustment, this is the risk premium. Risk premium for bearing the risk. This is for the risk. So therefore, risk-free rate of return is for what? Time value of money. Right? Your required rate of return. This is theoretically very strong formula, right? You might not understand at this level. Your required rate of return is equal risk-free rate of return plus risk premium. So this risk-free rate of return for what? Your time value. So it is adjusting for your consumption preferences for when consumption and also the inflation. So that is the time value of money. So risk-free rate of return is the proxy for the time value of money. So in addition, risk, additional if you are investing in the risky investment, for this rate of return, you have to add some risk premium. With the capital asset pricing model under the risk calculator, we are deriving this risk premium based on the beta coefficient. And also there are other methods. So this risk premium quantitatively you can calculate. We are not going to that much of it, but anyway under the capital I will explain this risk premium calculation. So that is your required rate of return. Right? So nominal risk-free rate is short-term interest rate for the treasury bills. So this risk-free rate represents payment investors need for foregoing current consumption, future consumption without inflation. So this is adjusted for the with the inflation when they invest. Just understand this is how your required rate of return is computed. Right. So then now this is our theory. Therefore, rupee receiving today is more valuable than rupee receiving tomorrow. Yes, that is time value of money. Money receiving today more valuable than money receiving tomorrow because of consumption preferences, alternative uses of money, risks, and inflation. So therefore, cash flows receiving in the different time periods, you cannot compare them as it is. Yes, because now you know that there is a time difference. Now suppose there is a project investment. Right? There is a project or investment. You are investing 10,000. This is the project cost. Suppose this is the 3-year project. End of year 1, net cash inflow is 20,000. End of year 2, net cash inflow is 15,000. End of year 3, net cash inflow, say 10,000. This is the project. Your cost also 10,000. At the end of year 3, you are getting 10,000. Both are 10,000. Does this 10,000 are equivalent to this 10,000? No, because this is the today you are investing 10,000. This is you are getting in 2 years from now. Now, if I ask you the return of this project, how much? How much the return?